You can manage your personal finances with QuickBooks Online.
I would love to be able to manage my personal family finance.
Yeah, and I'd really love to know what I'm spending on and how much.
Home and family financial management.
I want to know if the air conditioner in the summer
It's costing more than the heater in the winter.
Yeah, I would like to know if the heater in the winter
costing me more than the air conditioner in the summer.
I need to know best how to manage my town.
How to handle your non-business finances.
So I work more than one job,
So how much am I really making
from each job.
so it's helpful for me to know how much I make in one job versus how much I make at another job.
I would like to know how much I'm really making from each job.
Yeah, it's good to know how to really best spend our time.
Family budgets? It's all right here.
It would be great if I can only click once.
And get to see the balance of
Every credit card,
and bank account.
without having to log into each one.
And see the balance of every bank and credit card account instead of 100 logins every single time. I want to be able to click and bring up a list.
Of every transaction.
With each vendor.
It would be great if I could have a list of transactions organized by store so that if I had a problem, I could just find it right away.
We're going to show you everything that everyone just asked for right here in this free video, and it all starts right now. Hi,
We're a family.
and a family needs to keep books and records of their financial activities the same way a business does.
Why not use QuickBooks Online?
It can do amazing things for you if you just spend a few minutes each day putting in your transactions. So simple. If you make that sacrifice, then you will get robust financial reports that'll give you amazing insights into every aspect of your personal or your family home finances. Once you see all your financial information presented on these great reports, you will have clarity and you will feel in control of your life and you will have financial peace of mind. So we are going to show you in this special QuickBooks Online tutorial exactly how to manage your personal, family, home finances, and hopefully we'll have some fun along the way. In fact, I personally guarantee you the clearest possible explanation for every possible topic that you could need to learn if you want to start as a beginner, knowing nothing at all, and finish as an absolute expert in QuickBooks Online. And you'll finish as an expert specifically for using QuickBooks Online for personal, family, home finances.
So, just follow along with us, step by step. It's gonna be super easy, just like a kid's show. And by the time we're done, you're gonna be an expert in QuickBooks Online.
Serina and I are going to talk you through the very simple setup of QuickBooks Online. Then we'll really be ready to start using QuickBooks Online to manage personal, family, home finances. But before we even get to using QuickBooks Online, I am first proud to bring you this special presentation that explains exactly what accounting and bookkeeping actually are. This presentation explains how the ideas of business accounting and bookkeeping actually came from the ideas of keeping home financial records. So without further delay, here is the whole idea.
It all starts here, online at the supermarket with your grandma.
You see, your grandmother had something called a checkbook register. She could also call it her checkbook or her checkbook ledger.
She would take out her ledger book and write down everything about the check she is going to give to the cashier. Things like when, who, how much, and why. Most importantly, why? Because
recording the reason why helps you remember later all the information about that check, and it helps you know that that was legitimate. This would help her when she looks back at the register to make sure that she recorded all of the deposits that she made for all of the income she had from the different jobs that she did. It also helped her double check that she properly recorded all of the checks that she writes for all of the expenses that she has. And she could always double check if she wrote down the correct reason and the correct amount, date, or anything else. Now, organizing her transactions in the ledger book in this way helped reveal something called the running balance, which is the balance after each transaction, so that she would always know how much money she had in the bank at a specific moment in the past.
when Grandma took a look at her ledger book, she saw that a lot of the reasons were the same. She then got the idea that she could sort the ledger book by reasons.
And when she looks back at the ledger, she can see that it would be very helpful if she could have all of the transactions that were for the same reason grouped together so that she could see all of them at once.
So she could see the total she spent on each reason.
So she got the idea that she could go through the ledger book and pull out all the transactions for the same reason and put them in the same place so that she could see the total for that reason. For example, if she wanted to see all the money she made just from her cat sitting job, she would go through the register, pull out all of the transactions that gave the reason cat sitting income, and put them all on one document. Same thing with the expenses. She could go through the register and pull out every check that relates to car expenses and list those on another page in another book. So she took a separate book, separate from her check register, and made each page in the book a page for each specific reason. This way, she could list all of the transactions for that reason on one page. You see, finding the totals of each reason will really reveal all the information about your finances and how well you're operating as an individual. And she would take the total of each reason and she would use the total number to look and see how well she's doing and how much she has. Now, each of these totals would be organized onto a document so that she could see clearly how much money came in, how much money really went out, and how much should be left over at the end. And there were different financial reports that Grandma would take the totals and organize them so that she could see what's going on with her family finances.
So we could call it Grandma's Book of Reasons, but it's really called the General Ledger. In the computer, it's called the Chart of Accounts.
The idea of using the general ledger in the days before the computer is exactly how we use the chart of accounts when recording in the computer and in QuickBooks Online. You see, in the days before the computer, the general ledger was simply a book where each page in the book represented a different reason or a different set of transactions that are in a category that you needed to have the total. And what you would do is you would record the different categories of transactions into the proper account. In the general ledger, you needed an income account and a separate expense account for each of the different ways that money came into and out of the business. And you would also need an account in the chart of accounts for each bank type of account that you had and each credit card type of account that you had. Once your general ledger was set up, you would simply copy all of the transactions that you recorded in the check register into the appropriate account in the chart of accounts. This way, they're recorded in two separate books, but in the chart of accounts, they're organized by reasons or by category. And of course, once all of the transactions were copied over into the general ledger, you would then have to summarize each account and get the total or the ending balance, because it was the ending totals that really revealed what was going on with your financial position.
Then the income and expenses would be saved to one report called the profit and loss.
Some of the totals would be recorded and organized onto a document called an income statement, also called the profit and loss. And the profit and loss would have some of the totals from the general ledger, and it would reveal the net profit of your operations, which means as an individual, this report should show you how much you are supposed to have left over after a specific period of time.
That really helped us understand our money situation when we looked at each total.
Some of the other accounts would go on other documents. For example, the bank accounts and credit card accounts would be organized onto a different financial statement called the balance sheet. And the balance sheet would compare how much you have versus how much you owe. And by looking at it, you would be able to tell your general financial position. But before any of the totals would go on the profit and loss or the balance sheet, she would first make a list of all the totals in the general ledger, and all the numbers would go first on that list.
So, at the end of each month, she would take each total and put it in a list. And that list is called the trial balance.
Then after looking at the trial balance, some of the numbers would get pulled off and go to one financial statement, and the other numbers would get pulled off and go to another financial statement.
So, you know how well you did each month.
And that, my friends, is the whole idea of bookkeeping and accounting, whether you're a business or an individual or family.
In the old days, we used ledgers, but today we're going to show you how to do it in QuickBooks Online.
You see, in QuickBooks Online, it's the exact same thing, only faster. The register window in QuickBooks Online looks exactly like your grandma's register book, but as soon as you record something in the register in QuickBooks Online, the software will automatically post it to your chart of accounts and put the proper number in the proper page in the book. Now, when you look in the computer and in QuickBooks Online to see your chart of accounts, it won't look like a book. It will look on the computer simply like a list, because somewhere in the computer is a separate record for each item on the list in your chart of accounts. So you can rest assured that as soon as you record a transaction in your register, QuickBooks Online already knows the correct account to record and copy that transaction into. And of course, once the transactions are recorded into the general ledger in the chart of accounts, QuickBooks can immediately show and update your trial balance report. So as soon as you record something in the register, the totals in the trial balance will change. And of course, the same numbers that show in the trial balance will be shown on the individual financial statements as you open them up as soon as you record a transaction. So stay with us as we do everything we just described in QuickBooks Online. And again, we promise you that if you watch this video a little bit every day, every lesson will be both easy and fun. And now it all starts with you signing up for your free QuickBooks Online account so you can follow along with us step by step.
Chapter 4. Signing up for free.
So now I'd like to make available for you 2 different ways that you can sign up for QuickBooks Online for free. Both of the ways to sign up for free have separate links, and both of the links are listed clearly down below in the description field of this video, right below the table of contents.
So, you can sign up for 30 days for free with the Plus version, or you can have it forever free with the Accountant's Edition.
Now you may well ask, what's the difference between the Plus version and the Accountant's Edition, and which one is better to use for home finance? Well, I can tell you, they both have all the features you need to properly manage your personal non-business home finance. And for our purposes, there's very little difference between them. The difference in practical terms is that if you sign up for free for the Plus version, you will only have the Plus version free for 30 days. However, the Accountant's Edition is free indefinitely. The first thing you have to remember is that it really doesn't matter how you answer the sign-up questions. There's nothing that you can do to answer the sign-up questions at the beginning that cannot be changed once you get past the questions and you're actually in your QuickBooks Online account. In fact, a lot of the times, no matter what answer you put to some of the questions, it won't even affect at all what we're doing because we're using QuickBooks Online in the simplest possible way because we're using it for home finance and not business. So the best thing I can do for you without demonstrating each click step by step is to give you a couple of rules and guidelines to follow that'll make getting past the setup questions the most quickly so you can get right into the account and start working.
In order to go the fastest and input the least, pretend you are a sole proprietor with no employees and no partners. Any opportunity you have, click skip now, and we will explore any of these other features later.
Now in the next video chapter, we'll explore more clearly the rest of the QuickBooks Online interface, but there's just a couple of things more I want to mention about the sign up. If you're signing up for the 30-day trial version of the Plus level subscription, you will have to put in your credit card number. But don't worry, I'm going to show you how to cancel before 30 days is up, and I'm going to show you that right now. So if you're using the Plus version, you'll start with the cogwheel up here, and in the top right, the first choice is subscriptions and billing. And if you have the Plus version and you want to cancel within the 90 days, after you click billing and subscription, come down here where it says cancel subscription and click. Then follow the prompts. This way you won't be billed after 30 days if you don't want to keep your account. And now you're ready to explore the rest of the interface in the next chapter.
Chapter 5. Navigating the QuickBooks Online interface. No matter what subscription level you have, 3 things will always be the same. On the top right, the cogwheel will always be there for setup steps and handy tools. On the top left, the plus sign will always be there for whatever kind of transaction you need. Anything else you need to find can be found in the left panel.
Now we will not be using most of the windows that you can open from the cogwheel or the plus sign, but the left panel will be very important to us. You see, the left panel is the only place that you can access the reports area, and the reports are the whole reason why we're doing QuickBooks Online in the first place. They are the ones that show us our entire financial picture. You should also know that the left panel is also the only place that you can access and manage the customer data. Now, as people using QuickBooks Online for home finance, we don't necessarily call them customers. But we would put on the customer list the people who pay us for the services that we provide. So if you have two different jobs and one is from an individual and another is from a company, you would put both of their names on the customer list. And I'm going to show you how to do that very quickly. This is also the only place that you can access the vendor list. And whether you're in business or you're a family or an individual, everyone needs to pay people and companies for the things that they need to maintain themselves. That list is here in the left panel, and I'm going to show you how to manage that list as well. So if we do a side-by-side comparison of the Plus version's left panel compared to the Accountant's Edition left panel, you can see that for the most part, the menu choices are the same. However, there is one small difference. Some of the words in the Plus version will be slightly different when referring to the same thing in the Accountant's Edition. For example, the Accountant's Edition calls the settings window Company Settings, and in the very same position in the cogwheel for the Plus version, that very same window is called Accountant Settings instead of Company Settings. Most of the things will be the same, the windows they open will be the same, and the functionality will be the same. And if there's any slight difference in the words or place to click, I promise I will show you the difference as I demonstrate the idea. But in both cases, you would have to go to the left panel to get the reports and manage the reports. You would have to go to the Sales Customer window to manage your customers or the people whom you receive money from. You would have to go to the Expense tab and go down to Vendors to put in the list of the people or companies whom you pay for the services or products that you use. And that would be the same thing in the Accountant's Edition. Reports, and then you would go to Sales to put in your customers or the companies you work for. And you'd go to Expenses to put in the list of vendors or the companies whom you pay for the services that you use. So you'll never be lost when using QuickBooks Online. And if something along the way is very different from what you see on the screen, don't forget to reach out to me right away by leaving me a message in the comments section below, and I'll do my best to help you. So now, let's actually use the Account Settings window to put in our first piece of data. We're going to put in your name and address. You see, if we were using QuickBooks Online for a company, this would be the place to put in the company name and address. But because we're using QuickBooks Online for home finance, this will be the place where we put in your name and address. That means whatever text you put in these fields will be the text that shows up at the top of every financial report. This way, you'll always know who this report belongs to. So watch how it goes. We click from the top right, the cogwheel, and I'm showing this from the Plus version, so it says Account and Settings. Once we click to open the window, you'll notice the left panel of the Account and Settings window has different categories that you can choose. For now, we're only going to choose Company, and then you notice each category has different sections that you can highlight. We'll stay in the top section, and if you click anywhere in the top section, it will open up the data fields exactly for that section. Now, you will type in your company or family name. Okay, and then of course, if you were a real company, you would fill out the rest of the information, but now all we have to do is click Save. Good. Now, none of these fields will stay unless you go to the bottom right and click Done. Now, notice the name changed here to what your name is or whatever you put. and you can click right on it, and you'll go right back to the account and settings and be able to change it to anything you want. And you can put your address as if it were a company address exactly in the same place, and you put it in the same way. So, again, we click the cogwheel, we go to Account and Settings, and we're still in the company category. But we scroll down and notice if we were a company, we could have 3 possible addresses. We could have a legal address, an address that we want the customers to know about, and our actual physical company address. So I will only show you how we change one of them, and we change them in the same way. So I will put an address, and you can put whatever address you would like. I'm going to put 1700 Prospect Avenue, East Meadow, New York, as an address, but you could put any address that you need to. Now, when we click Save, notice it shows right here, and you would change either or both of the other two if you wanted to. Now, remember, the settings window will not save. Even if you save the little section, it will not save what you did unless you come here and click Done in the bottom right. Now, when we open reports later, you will see the name that you put and the address that you put on the top of every report. So you'll never be lost when using QuickBooks Online. And if something along the way is very different from what you see on the screen, don't forget to reach out to me right away by leaving me a message in the comments section below, and I'll do my best to help you. Chapter 6. There is no Chapter 6. You see, it wasn't very interesting and did not make the final cut, so without further delay, I proudly present Chapter 7.
Chapter 7. Inputting the chart of accounts.
Now, before we give you the list of sample accounts to type in along with me, let's first decide exactly whom we're doing the home finance records for. Now, believe it or not, grown children who work more than one job have their own income, expenses, bank account, and even their own credit card accounts the same way adults do. So keeping financial records for a kid would be the same as keeping financial records for a grown person or an entire family. So we might as well use a special example to keep everyone engaged. Let's imagine we're doing the books and records of a kid.
Hi, I'm a kid.
That's right. The kid whom we're doing the home finance for in this video is none other than the internet sensation, Serina Mae Jackson.
Hey, kids work hard for their money too.
Now, of course, we know that adults have expenses that kids would not have, like medical or groceries or anything else. But if you can just imagine that you need to record your expenses exactly the way that you see us recording Serina's expenses here, then you'll know how to do it for your own personal family finances. And of course, you will record all of your bank transactions, all of your credit card transactions, and even the transactions where you pay or receive cash exactly the same way that we are recording it here in this tutorial. Now, when we input the chart of accounts together, it's very simple. It's as easy as typing in a list. Each item on the list will have 3 simple pieces of data as you type it in, and you'll see how I type it in, and you'll follow me step by step. The first piece of data you have to put in for each account is the account name. Now, the account name can be anything you want, but then you also have to put in account type, and then after you choose an account type, you have to choose something called a detail type. And the guidelines I give you will make things very, very simple. You see, the name can be anything you want it to be, as long as you know what it is when you look at it. But exactly what you type into the name field is exactly what you'll see when you look at your results on the financial reports. Now, the other field of data you have to put for each account is account type. An account type determines how it will behave and function and which reports it will show up on. And it will also determine what types of transactions you are allowed to record into that account. And lastly, the last piece of data you have to choose for each account that you put in the chart of accounts is called detail type. And usually, detail type is not important. In our case, it won't be important at all, but you should know that it sometimes gives extra functionality to the account. And again, we will not need detail type, and putting in the wrong detail type with us won't affect anything. So let's start by putting in all of Serina's expenses.
And sure, we have personal expenses too. Just like a business has expenses to maintain themselves as a company, I have the following expenses to maintain myself as a kid.
So exactly what expenses does Serina have?
I pay for my own transportation, so I have transportation expenses. I pay for my own food, so I have food expenses. I pay for my own school and job supplies, therefore I have school and job supply expenses. And don't forget about cat food and cat treats.
Minecraft, Roblox, Geometry Dash, Crunchyroll, and Fortnite.
Entertainment expense. So here are Serina's expenses listed clearly. And notice, we not only put the name, but we made it very simple by making them all the same account type and detail type. Because those technical details are not important for us if we're simply doing home finance. But QuickBooks Online requires that you put something in those data fields, so simply put what we have listed here. So watch how to input the chart of accounts. First, we go over to QuickBooks Online, and as we learned earlier, there are two ways that you can open the chart of accounts window. You can go to the top right and click the cogwheel, then go over to the left column where it says Your Company, and go down and click Chart of Accounts. You can also get to the Chart of Accounts by going to the left panel and clicking Transactions, Chart of Accounts. The very same window will open up. Now, if you look, you can see that QuickBooks Online thinks that it's helping us by adding accounts before we even input any of our own accounts. That's because most companies have very similar names to the different expenses they have, and they have very similar names for other accounts like their bank account and so on. We will not be using any of the accounts that QuickBooks Online put. Instead, we will be putting our own accounts and only using those accounts. And one of the ways to make it easier to see only the accounts that we're using is to make sure that your cap locks button is turned on the keyboard so that the name of every account that we input ourselves will be in capital. That will help us distinguish between the accounts that we made and the accounts that already come with QuickBooks Online. So all you have to do is click in the top right corner and click New. Now, we have to put in a name and a type and a detail type for each of these. So the first account name is food expense, and it's an expense, and it's other business expense. So with the cap locks on, we click in the name field, FOOD, and of course the account type, we choose expenses by scrolling down and click expenses. And only in the detail type, we're going to choose other business expenses. And this will be the same type and detail type for all of the Serina expenses that we type in. So when we click Save, we can come back to the chart of accounts and scroll down to the expense area, and you see the only one in capital letters is the one we just added, food expense. But I'm going to make it much easier for you to find the accounts that we put ourselves. Watch. If we scroll all the way up, we have the option to display only the accounts that we created ourselves and disregard any of the accounts that were already on the list when we created the account. So just click Created by You, and you can see right now we only have one. But don't worry, we'll have all the others in a moment. So we come back here and see transportation expenses is also on the list. So we click New, and we type in transportation expense. And of course, all of her expenses are account type expense and detail type other business expenses. Now, look what happens if we click Save and New. It appears on the list, but it keeps the new account window open so we can go a little faster. Let's go to the next one, supplies expenses. So supplies expense. And again, look what happens when we click Save and New. It will remember the account type and detail type because it assumes we're putting in many of the same type. Notice you now have 3 on the list here on the left, and we can put in the 4th expense, cat-related expenses. And of course, we leave the type and detail type the same and click Save and New. Now, right now, we only have these 4. But if you click New, you probably should be able to type in the last 3 yourself. So let's pause the video and see if you can type in these 3 exactly the same way that I showed the other 4 and see if your chart of accounts looks the same. So now you can see that the accounts that we created were all expenses, and you can see we have now entered all of Serina's expenses, and these are the ones we'll be working with during this tutorial. Now it's time to put in her spending accounts. And when I say spending accounts, I mean the accounts that someone spends money from. You spend money from a bank account. You spend money from your credit card account. And you could also spend money from an account that you keep records of for your physical cash when you spend cash. Those are what I call spending accounts, and those are the accounts in the chart of accounts that will actually open up in a register window where you can put in the transactions for that bank account or that credit card account, or put in your cash transactions in your cash register book account. And those 3 accounts are very simple to set up. But if you look closely at the account types, you'll see that, of course, a credit card is a credit card type of account. But if you look at the bank account, you'll see that you have to choose if it's checking or savings in the detail type. And if it's a wallet or a lockbox or a purse that you're keeping records of in a separate account, you need a separate account in the chart of accounts, and that will also be a bank type of account because you need that to open in a register window to specifically record all of your cash transactions. And that'll be a different detail type. That detail type will be cash on hand, so you can see the difference between each of the 3 accounts that you spend money from. And it's very simple. We do the same exact thing. We scroll to the top. If you're not in the chart of accounts, you have to reselect it by clicking Chart of Accounts. And don't forget to choose only the accounts that were created by you. That cleans things up and makes things much more clear. Now, we click New Account. And of course, the first name will be Serina's Visa. And if account type is credit card, then there's very little you can choose for detail type. So this one is done. Click Save. And you can see that Serina's Visa was added to the chart of accounts. Click New. This one is Serina's bank account, so we call it just Chase Bank, or you could just say Chase Bank account. And of course, this will be a bank type of account, so it opens in a register window, but this will be checking. So the detail type sometimes helps because it clarifies, but don't worry if you choose the wrong detail type. It won't affect anything that we do here. And of course, we click Save, and her bank account is on the list. And now we need a separate account, an account register, to track her cash on hand, whether she keeps it in a wallet, a purse, or even a lockbox. So we type in the name. This will be Serina's wallet. And of course, we need it to be a bank type of account, so the account will open in a register window, and now we'll put the account type cash on hand. And when we click Save, we can see that the new accounts are added to the chart of accounts, and now we have only the spending accounts and the expenses, which means it's now time to enter Serina's income accounts. Now, in order to really understand how you can benefit by using QuickBooks Online for your home finance, we're going to imagine that Serina has 2 different jobs. This way, you can see how nice it is to compare the income from one job to another, so you can better make choices about how to spend your time and energy. So here are both of Serina Mae Jackson's jobs that we will be recording the income from into our QuickBooks Online.
My first job is being the neighborhood cat sitter. So I need an account in the chart of accounts to keep track of all the income I get from taking care of the neighborhood babies.
My second job is being the outdoor bouncer here at the local biker bar in Queens. This job is only on weekends, and they pay me cash. I'm on the books because it will give me a 1099 at the end of the year. Hey, behave yourself and have a good time. So, I needed an account for my bouncing income the same way I needed an account for my cat sitting income. Every time I record a deposit in my bank register for bouncing income, it will get recorded in the bouncing income account. This way, I can tell the difference between how much I'm making in each job.
Hey, Serena.
Hey, buddy. Hey, you gonna put that cigarette out?
Oh, sorry.
Hey, behave yourself. Have a good time.
Huh?
This way, I can know the difference between how much I'm making in each job. Then, I can decide how much time to spend on each.
Hey, Serena.
Hey, behave yourself. Have a good time.
You got it.
So now here are the last 2 accounts in the chart of accounts that we need to enter. Notice the account type is income, and to keep things simple, the detail type will be the same for both, service fee income. So let's go ahead and type it in the way we learned. We click New, and the name, as we set it up, will be income from bar bouncing. And of course, it's an income type of account, income, and the detail type will be service fee income. Of course, you can keep this window open by clicking Save and New, and then do the next one, Income. And of course, you have the same account type and detail type because we clicked Save and New. Now we're finished, so we can click Save. That'll close the window, and when you finish, this is what Serina's chart of accounts should look like when you're done. Now, just a little bit of house cleaning regarding the chart of accounts window. You could always switch it back to see all the accounts, which means the accounts that you made will be mixed in on the list with all of the other accounts that QuickBooks Online automatically provides. And just to let you know, you can remove any account, whether it's yours or one of the ones that came with QuickBooks Online, by going down to the row of the item you want to remove, and in the pull-down arrow, you can click Make Inactive. Yes, Make Inactive. That means that account will no longer clutter up your chart of accounts, and this way you'll have a smooth experience. Congratulations! We're finished setting up Serina's chart of accounts, and we're almost ready to start entering home finance transactions and using the beautiful, robust reports. There's only a tiny bit more of the setup, and the rest is very, very easy.
Chapter 8. Inputting the names list. Now the final part of the setup is putting in the list of names. That means the names of the people that we do the transactions with.
That's right. Just like a business, an individual needs to pay companies or even some other individuals for all of the products and services that they need to function or just to have a good time. Now here we have a list of all of the names of the businesses and the individuals that Serina needs to pay to either be able to function or at least get the things that she likes. And we're going to type them in together step by step. I first want to mention that in a real situation, you would type in much more than just the name. In a real situation, you would type in the name and the address, phone number, email, website, and so on. But because we're only learning these things for example, it'll save a lot of time if we allow ourselves just to type in the name. And of course, you can always go back and enter the address and phone number or even edit any of the information that you're watching us put in now. So I'm going to skip back and forth between the list and QuickBooks Online and type in the vendors one by one. So first we have MTA New York City Transit. Now, in order to input your list of vendors and of course edit and manage them, you go to the left panel in the main choice Expenses. Just hover over the Expense tab and you'll get these 5 other choices. Then come across and go down to Vendors. Now, if this is your first time going to the vendor window, you'll get this little message, but we won't pay attention to this. We'll just click Add Vendor. Notice you get a set of fields where all you have to do is type in the name and save it. Now, of course, you get distracting pop-ups that QuickBooks thinks is helping you. But let's close it out, and we'll type in the first name, MTA New York City Transit. I like to put them in caps. MTA NYC Transit for Serina's MetroCard and her subway, bus, whatever she pays. These are the people whom she's paying when she pays transportation expense. So normally you would put the first name and you would put the phone number and the email, but we will not. We will not do that. What you'll have to do is, at the very, very bottom of this window, you see in the bottom left there's a Save button here, and we click Save. We're actually not in the list of vendors. we're in only the MTA New York City Transit, where it's telling us all about that. And we can edit the information, add and change anything we want. But right now, we're still looking at only one vendor. To see the full list, you come here to the top left and click Vendors. And now you can see this is the list of vendors, and we have only one vendor on the list. And of course, to add the next vendor, we go to the top right and click New Vendor. Okay, who's next on the list? McDonald's. So we type in, okay, and again, normally we would put other data. You can always reopen and add data or change it, but we're going to click Save. Now we're only looking at the McDonald's information here. We could always switch to look at the information for another vendor here, or we can click Vendors to go back to the list of vendors so that we can add the next vendor. So we click New Vendor, and the next name on the list is Sri Chinmoy Veggie Restaurant. Okay, Sri Chinmoy Veggie Restaurant. Okay, now spelling doesn't count. And of course, we would click Save. Now, after you save it, you're only looking at that one vendor's information. However, you can click the blue vendor arrow here and come back to the list. Let's do one more together. Click New Vendor, and the next one on the list is Such and Such Game and Card Store. Okay, click Save, and again, we're only looking at this particular vendor, and we can look at the details of their address and so on, and we can edit them from here, or we can click Vendor and go back and add the rest of the vendors. So now that you see how easy it is, see if you can put in these 4 remaining vendors yourself. Polly's Perpetual Perfect Pet Store, Bonnie's Brass Knuckles Emporium, Ever-Go-Round Fine Clothing and Jewelry, and of course, Staples. You can put them in without an address, and just to remind you, if you ever wanted to go back and add data or change it, all you would have to do is go to this list, double-click the name, and then of course click Edit, and then you could add or change any of the previous information you put for that vendor. It's that easy. It's easier than managing your phone contacts, but it's the same idea. Now, when you finish typing them in, this is what your vendor list should look like with all of the names. And of course, spelling doesn't count. If you typed in a slightly different character, it won't make a difference for us, but you'll see in a few minutes when we start making transactions, these will be the names to choose from when you're paying someone for a product or a service. And exactly the same way that we put the vendors on the vendor list, we're going to put Serina's customers on the customer list. Now, let me just say that obviously an individual doesn't always have customers. Not everyone is self-employed with a part-time job the way Serina is. But an individual that works on a job does get money from that job. So if you're doing QuickBooks Online for home finance, what you'll do is you'll put on the customer list the name of every job that you work for. This way you can track all the transactions for all the money you got from that one job. Now, Serina has one steady job on weekends, and she works for herself as a cat sitter. And when she works for herself as a cat sitter, she has 3 separate customers that she does the cat sitting for, in addition to working for the bar on weekends. So that means her customer list should be 4 items long. The job that she has, plus the 3 customers that she has as a self-employed person. So now here's the name and address of the bar that she works for, and the name and address of the 3 cat-sitting customers. Now again, you don't have to put in the address, but you should experience what it's like. So what we'll do is we'll put in the address when we put in her customer list. And you will see putting in the customer list is 100% the same as putting in the vendor list. When we put in the vendor list, we clicked expenses and vendors. So when we go to put in the customer list, we put in sales and go down to customers. And again, if you only work on a job, it would be the name and address of your job. If you have several jobs, it would be the name and address of each job separately on the list. And of course, if you were self-employed, you would use the customer list for your list of customers. And again, you can see this is the first time we're going to this window, so we have to click past the message and click Add Customers. Notice right away a set of fields of data come up for you to add your very first customer. And once it loads, you can type in the name of the first customer, McPayoff's Roadhouse Bar and Grill. And this time we get to put in an address. So you can scroll down for the physical address and come back here. Okay, Bedford Avenue, Belmore, 11234. Apparently it has no number. Bedford Avenue, Belmore. And the city will be Nassau. I guess it really doesn't matter. State, New York, zip code 11234. Okay, now when we click save, it's the same exact thing with customers as it is with vendors. We're looking at one particular customer whose information we can edit if we want to. But if we click the blue arrow where it says customers, we go to the list and we see we only have one customer on the list. And this will be the list that you go to when you click Sales, Customers. Then you can double-click the name and click Edit and add or change any of the information you typed in. Leave without saving? Yes. Let's go back to the list and add our next customer, Zelda, cat-sitting customer, 1616 Mockingbird Lane. So we click New Customer, Zelda, and of course we would normally put her phone number and her fax and her email, but we'll put 1616 blah 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 and save it. And of course we're looking only at Zelda's information after we save it, but we can click back for customers and now we have 2 on the list. See if you can put Dave Diakil and Donna Daly on the list of customers exactly the way you just saw. And when you finish, this is what your customer list should look like. Again, to get here, you click Sales and go down to Customers. And once you're here, you can double-click the name of any customer and click Edit, and you can change or add anything you want.
Chapter 9. Setting up the interface for home finance use.
Now, the whole reason to use QuickBooks Online is to ultimately look at the final reports and gain tremendous insights and empowerment into our family's financial condition. However, QuickBooks Online comes with many, many reports. And if we have to look at the reports that we use all the time by sifting through a huge list of reports, we're going to lose a lot of time. So, what we're first going to do is manage our reports by pulling out the 3 reports that we discussed earlier, the trial balance, the profit and loss, and the balance sheet, and we're going to set them aside in a special place that makes it very easy for us to click on them when we need them. Now, we've already discussed why we need those 3 specific reports. We know the totals of each account in the chart of account get listed on the trial balance, and we know that some of the numbers in the trial balance will then go on the profit and loss, and the rest will go on the balance sheet. So we will work with all 3 of these reports, and we will set them aside right at the beginning.
My Uncle Mark and I will help you set up.
Now, we remember that the only place in QuickBooks Online to open reports is from the left panel menu. So we click Reports, and we notice on the top of the Reports window that there are 3 sections: Standard, Custom, and Management. Now, we have to start out with the Standard section. And when you click on the Standard section, you'll notice there's many reports. Too many, especially if you're only using QuickBooks Online for home finances. But if you scroll up, you can see that each of these sections have a little triangle, upside down triangle, or maybe the letter V, right at the top of the section. Now, what that will do is if you click on it, it will collapse the section or open it up if you click on it again. If you collapse it, you can see the section below it. Who owes you? Click, close it. Close Sales and Customers, open. This section is all about reports that would help you if you were in business dealing with sales and customers. And of course, we're going to close it out. Now, the only section of reports that we need right at this moment is all the way at the bottom, and it's the section for my accountant. And the reports that we're looking for, first, the trial balance. So when you find the trial balance, click to open it up. Now, we're about to save it in a place that we can easily access it. That place is the Custom Reports section that I showed you a moment ago. But before I save it there, I want to customize it so it suits our needs. Now, what do I mean by customize it? Well, you'll notice if you look in the top left here, by default, the trial balance opens showing whatever the current month is to date. And since I'm recording this on August 3rd, it shows by default the results of all transactions between August 1st and August 3rd, month to date. Whatever the current month is, up until today's date, whatever the date is in real life. However, I don't want to save the trial balance looking like that. It would help us when we study if we could ask the trial balance to show us the results of all transactions, regardless of date. So the way to do that is to click in the top left where it says Report Period, and make sure that you scroll all the way up to the top and choose where it says All Dates. Then after you make a change, nothing will change until you click Run Report. So right now it says as of August 3rd. But if I click Run Report, it says All Dates. Now, of course, we have not recorded any transactions. That's why it's blank. But what would show here are the results of all transactions, regardless of date. And now that it looks the way we need it to look, we're going to go to the top right and click Save Customization. Now you can leave the name trial balance, so you could type in any additional name with that, whatever you like. But whatever you type here is the name that will show up in the Custom Reports section that will make it very easy for us to get to. So we click Save. Now let's check to make sure that it's really in the Custom Reports section. We click Reports, Custom Reports. Here it is, my trial balance. And when we double click, notice it remembered that we wanted it to say all dates, not month to date. Because if we went back to Reports, Standard, and reopened it fresh all the way like we did at the very beginning, for my accountant trial balance. Here it is. If we open it from the same spot as before, notice it says as of August 3rd. But if we quick click Reports, Custom, My Trial Balance, it says all dates. So we just learned our first piece of customizing the reports and saving it with that customization. Now let's do the same thing for the profit and loss and the balance sheet. So we go back and we click Reports, and we have to pull out the profit and loss from the many reports on the standard report page. So we scroll all the way down to the section of For My Accountant, and here we are, profit and loss. Click on it. Notice, by default, the profit and loss opens where it says year to date. But again, in this class, to help us study properly, we have to click the pull-down arrow, choose all dates, and notice the month and the date here that I'm pointing to in the middle will change as soon as I click Run Report. Now, I ran the report with all dates, and that's what it says. We still don't have transactions yet. We will in a moment. But if I click Save Customization and then click Save, that means I can click Reports, Custom, and my profit and loss is right here. Now, one of the reasons I like it to stay at all dates is because you can compare any two time periods you like at any time to see how well you did during this time period compared to that, even if you're an individual and not a company. So watch. If I wanted to compare how well Serina did between the month of January and the month of February, I would make two windows. I would open the profit and loss twice, and I would put them next to each other. Watch this. I'm going to first change the date range to a custom date range where it's going to be from January 1 of 2027 till January 31 of 2027. Now, when I click Run Report, notice it will say in the body of the report, January of 2027. Now, of course, there are no numbers there, but watch the trick that enables you to compare any time period to any other time period for your income and your expenses. I'm going to go to the tab on the top of the window, and I'm going to right-click in the tab in the top of your browser, the tab of the window where the report is showing, and I'm going to click Duplicate Tab. That's an amazing feature of QuickBooks Online. I now have two windows open logged into the same account in QuickBooks Online, and if you click between the tabs, it looks like it's showing the same thing. But on the tab next to it that I just created, I'm going to change the date range to February of 2027. So I'm going to make this February 1 to February 28 of 2027 and run report. Now in this window, I have all of my income and expenses totals listed here only for January. And in this window, I have all my income and expenses listed for February. And that's how you can have two windows open with the same account at the same time and be able to compare the same report over any period of time that you would like to compare. Now, of course, we have to do the same thing for the balance sheet. We'll click Reports, and we'll go to the standard area of reports, and we'll go down to the area of Accountant for my accountant, and here we have Balance Sheet. We click on it, and again, we want to change the date range to All. You will see how this helps us in the course, and we could always change the date range to anything else as we go along. So we click the pull down, All Dates, Run Report, Then, of course, Save Customization. We'll leave the name Balance Sheet and click Save so that we can click Reports, Custom, and see that the balance sheet that we saved with all dates is still there. Now, the last two reports that we're going to set up are the practical reports that give you a list of every transaction that you ever had with every company or individual. The first one we'll set up will be the Transaction List by Vendor, and you're going to be amazed how helpful this report will be. So we click in the left panel Reports, and we go to the Standard area, and we go down to the section of we go down to the section of Expenses and Vendors. Expenses and Vendors. And we scroll down to the report that says Transaction List by Vendor. Double click. Now, notice this is a special report that has a new modern view that they may or may not keep. So, we're going to close this out and take a look. Now, right now we have no transactions listed, but notice we can change from this to all dates, and it will change immediately. In the new view, we don't even have to click Run Report. We could switch to Classic View and take a look at it the way it used to look, and if we want to, we could again choose all dates and run report the way it looked in the classic days of reports. Then if we click Save Customization and click Save, when we reopen it, it won't have the new modern view, which you could always switch back to if you want, right? No survey now. But if we click Reports, Custom Reports, Transaction List by Vendor, we can see it looks exactly the way it looked when we saved it. It's also very helpful to have a transaction list by customer. And again, even if you're not self-employed, you could consider the jobs that you work for your customers. So you click Reports, and you go to Standard, and you go down to Sales and Customers, and in the section of Sales and Customers, you click Transaction List by Customer. Maybe this one will keep the new fancy view, just to remind you that you can switch back and forth for now. So we'll click All Dates and leave it like that, and then we'll click Save As. Okay, and it's reminding us, let's not do a survey now, but it's reminding us where we can go. We can go Reports, Custom Reports, and here it is, Transaction List by Customer. And this has the new custom look, because that's the way it was at the moment that we saved the report. Just by using these 5 reports 90% of the time, you're going to be amazed at how much control you have over your finances, and you'll always know what's going on.
Chapter 10. Recording the first deposits. So now, we will do our first transaction. Yay! My first paycheck!
So let's imagine on January 7 of 2026, Serina receives $500 for cat sitting from one of her favorite clients, Dave Diakil. Now, before I show you step by step exactly how to record this in the register window, let's first predict what the results will be in the trial balance after recording this very first transaction. So as you remember from the previous chapter, the trial balance is empty because we did not yet record any transactions. But at the moment Serina deposits her first $500 into Chase Bank will show up for the first time with a balance of $500. And because the reason she received the $500 is for cat sitting, that means that cat sitting income will also show up for the first time as $500. Let's take a look at how to record it. So we first open the chart of accounts so we can get to the register window for the particular account that this transaction is being recorded into. So we can click in the left panel menu, Transactions, Chart of Accounts, or you can click in the cogwheel on the top right and go all the way to the left and come down and click Chart of Accounts. Now, here's the chart of accounts, and here we have Cash Bank Account, or excuse me, Chase Bank Account. So this is the specific account that this transaction needs to be recorded in because this represents the bank account. So we come to the right and click View Register.
See? It looks just like your grandma's register. And entering any deposit or check is just as easy.
Notice, as Serina just said, it looks just like your grandma's register. And when you put in the information, you first have to be sure that you chose the correct bank account in the top of the register window. Now, when you go to add a transaction, you have to tell QuickBooks Online what type of transaction you're adding to the register. In this case, we're making a deposit. And once you choose the transaction type, all the appropriate fields will show up just like the way they look in Grandma's register. Now, you have to put in the date with the date box, just like we learned in the prior video. So we're going to click the calendar box and go all the way forward because I'm recording this before 2026. So I will have to go all the way forward to January of 2026. Make sure you choose January 7 of 2026. And if you're watching this after January of 2026, you'll have to click the left arrow in the date box to go back to the month you're looking for. Once we do that, we click the pull down arrow and we choose the people who we have the transaction with. In this case, we had the transaction with Dave Diakil, the great customer. Now, of course, we can put into the memo field any information we need that will help us remember details of this transaction. But we'll skip that for now. And the important thing to stress is if the money of the bank account is going down, you would record that in the payment column. But if the money balance of the bank account is going up as a result of the transaction, you would record that in the deposit column. So this is Serina's first deposit. We click the cursor in the field and we type in 500. Now, to make sure that we save one field of data without losing the whole window, never hit enter. Enter will save the transaction and move the cursor to the next one. Instead, if we only want to save one field of data, we go to the left of your keyboard and push the Tab key. That will save the field of data and move the cursor to the next field. Now, the very last piece of information that we need to put in is the reason why we got this money. So we click where it says Account by the pull down arrow, and the account in the chart of accounts will represent the reason why we received the money. So we want to scroll down to the income section. Okay, down here, somewhere here is the income section, income, and we want to go to cat sitting income because cat sitting income is the reason we received the deposit. So we click on it, and now we have all the information that Grandma used to write down whenever she would make a deposit or write a check. Look, we have when, we have who, we have how much, and we have why. Of course, if there was a reference number or some kind of deposit number and you couldn't put it in this field for some reason, you could always put it in the memo field. But we're going to click Save, and now let's check our result in the trial balance. We click Reports, Custom Reports, Trial Balance, and you can see the results here. I'll zoom in a bit so that you can see the results are exactly as what we expected. You can see that the Chase Bank account now has a balance of $500, and you can see that the cat sitting income now has a balance of $500. And now let's do Serina's second transaction.
Yay! My second paycheck!
Let's imagine On January 8th of 2026, Serina received her first check from McPayoff's Bar for bouncing. She received $1,500, again, directly deposited into her Chase bank account. So let's predict the results in the trial balance if she properly records this in the Chase Bank register. Right now, we have $500 in Chase Bank and $500 in cat sitting income. But if Chase Bank increases by $1,500 from the deposit from McPayoffs, then Chase Bank will become $2,000. And of course, because she got this money for a different reason, the other income account will show up for the first time for $1,500, bouncing income $1,500. So this is what the trial balance should look like after we record Serina's second paycheck. So again, you could click the cogwheel in the top right and go over to Chart of Accounts, or you could go to the left panel and click Transactions, and then go Chart of Accounts. Now, we can just click the specific register for the specific account that this money was deposited into. So cash and Chase Bank account, we click View Register. And again, we have to first choose what type of transactions we're adding. So we click Add Deposit, and we have all the fields of data we need for a deposit. We can click the date box, and I don't know why it's all the way, well, today is August. What we want to do is we want to go forward to January, and this is January 8th of 2026. So you can also overtype the number. You don't always have to click on the calendar box and use the arrows. So that'll save you time. Now, we received the money from McPayoffs. So we come here and choose McPayoffs. They're not really a customer, they're an employer. But when you're doing home finances, the customers are your employers. So we received $1,500. Oh, what am I doing wrong? Be careful, I'm putting it in the payment column. Remember, you have to scroll over to the deposit column if it's money going in to your bank account. 1500. So maybe I'll zoom out a little so we can take a look at the whole register. So we have the when, we have the who, we have the how much. Now we need the reason why, and the account will represent the reason why. We click the pull down arrow and we scroll to the income section, and again, this time we choose bouncing income. So we go to the income section, wherever it might be. You see this just, here we go. Okay, income from bar bouncing. That's the reason we got this deposit. So we click here, and now we have all the information that Grandma would type in to her register when she saved it, and now all we have to do is click Save. Now notice in the register window, they give you the running balance, the balance after each transaction, and you can see that change here. And if we click Reports, Custom, Trial Balance, you can see the results are exactly what we expected. After 2 transactions, cash and Chase Bank equals $2,000, cat sitting income equals $500, and income from bar bouncing equals $1,500. Now try these 2 transactions yourself and see if you get the same trial balance. So here are the 2 transactions that you should try to record on your own. They're deposits just like the first 2 deposits that I showed you. So go ahead and record them exactly the way you saw me record the first 2 deposits, and then we'll check the results together. Now, when we look at the trial balance, your trial balance should look like this. And I'll zoom in a little bit so you can see it clearly. If you entered those two transactions properly, the total balance in your bank account for Chase Bank should be $3,000, your cat-sitting income should be $900, and your income from bar bouncing should be $2,100. Now, I know some of you are asking, what if I made a mistake? What if one of the fields of data that I put into the register is wrong? Well, don't worry. QuickBooks Online allows you to change any field of data in any window that you entered any transaction. And as soon as you change the data and save the window, the results in the reports will change immediately. Watch. Let's imagine I have a mistake with Donna Daly. Let's go back to the register. I'm going to zoom out a little bit, and we're going to go Transactions, Chart of Accounts, come up, and in the Chart of Accounts, go across to the Chase Bank Account Register. Click View Register. Now, let's imagine that we did not receive $400 from Donna Daly. Let's imagine we received $44,440,000. Well, we can easily click anywhere in the two lines of the transaction that we wish to edit to open them up. Now, we click in the specific field that we want to change. We can highlight what's there and overtype it with the number that we really want. 444400, whatever. Some huge crazy number that when it gets saved is going to make your trial balance filled with huge crazy numbers. Watch. When I click Save, notice the first thing that changes is the overall balance of the bank account shown in the register. But when I click Reports and come down to the trial balance now has wild and crazy numbers. But of course, we can change it back just as easily. You can of course click Transactions, Chart of Accounts, go to the specific row of the account that you're working with, click View Register. Remember, to edit any line in the register, you have to click anywhere in the two lines of that transaction, click to open up the fields, then all you have to do is overtype with the correct number. To save just one field of data, go to the left of your keyboard and push Tab. That will move the cursor out, but not yet save the whole transaction. Now click Save, and we can go back to the report, that is our good friend the trial balance, and all the numbers fix themselves immediately.
Chapter 11. Recording Checks and Expenses.
And now, let's record some checks and expenses. And again, no judging.
So let's imagine back on January 3rd, Serina gave check number 1 for $200 to the New York City Transit Authority for her monthly pass for buses and subways. Well, if this is what the trial balance looks like now, before she gives the check, then what will be the result after she pays the New York City Transit Authority? Well, if she pays $200 to anyone, her cash in bank will decrease and become $2,800, $200 less than a moment ago. But that $200 went to a specific expense, transportation expense. So after she records this in the register, transportation expense will show up for the first time in the trial balance as $200. Let's take a look at how to record this. We go to the QuickBooks, and to open the register, we know we click Transactions, Chart of Accounts, and we go to the row of the specific bank account that we wrote this check from, and we click View Register. And again, the very first thing you do is go and make sure that you're choosing the right transaction type. From the pull-down menu in the top left corner, you click and get all the choices, and in this case we choose Check. And as soon as you choose Check, all the fields that you need to record a check will show up right here. Notice it assumes that you're writing check number 1, but if you wanted, you could overtype this with any check number that was actually on the physical check that you just wrote. But we'll go along with number 1. So we go forward to January 3rd, and remember it's January 3rd of 2026. That's our example year. Now we wrote the check to the New York City MTA Transit Authority, and the amount was $200. Now, this time it's a payment, so make sure any decrease to the bank account goes in the payment column. Type in the money amount. So now we have the when, the who, and the how much, and now we need the reason why. We click the pull-down arrow to choose the account that represents the reason why we're paying the New York City Transit Authority. And we're paying for transportation expense. Now let me show you a shortcut. Whenever you click the pull-down arrow and get the huge chart of accounts, you can type in the first 2 letters of the name of the account, and it will filter it by only those accounts that have those 2 letters. And it comes up much more quickly. We click transportation expense. Now we recorded all the information about this check, just like Grandma did when she wrote a check. And when we click save, we can check the trial balance and see if the results are what we expected. We can click reports, custom, trial balance, and we notice if we zoom in just a little bit, that the results in the trial balance are exactly as what we expected. Cash in Chase Bank went down by $200 and became $2,800, and transportation expense showed up for the very first time as $200. Let's keep going with the next example. So now let's try a second payment from the bank account. Let's imagine back on January 10, Serina paid such and such game store, whatever the name is, $300 with her Chase Bank debit card to buy some very fun things, whatever they are. She got a slip from the machine after she swiped her debit card, and the slip number was 09876. So, what's the difference between recording this and recording the prior transaction? The answer is almost nothing. When you go to record a debit card swipe, it's almost exactly the same thing as recording a check. The only difference is that when it comes to transaction type, you're going to choose expense instead of check. And the only difference in the fields of data that you put in will be, instead of saying check number by the check number field, it will say reference number. And that's the only difference between recording an expense that you paid for online and recording a check. Let's take a look at what the results should be in the trial balance. So if we can imagine that these are the numbers in the trial balance after our last transaction, and now we're paying $300 to such and such game store, you can imagine that the cash in Chase Bank will decrease by $300, and that will become $2,500. And if the reason why we are paying this store is because of entertainment, that means that entertainment expense will show up in the trial balance for the first time as $300. Let's take a look at how to record it. We go to the register window by clicking Transactions, Chart of Accounts. We go down to the specific account that we're recording the payment from, and we click View Register. Now, we're not adding a check this time. This time we're adding an expense because we paid directly from the bank account, whether it's through a debit card swipe or an online payment. We choose expense. And notice the only difference in the fields of data is that the number says reference number instead of check number. So you just put in whatever the number is that printed out on the little slip, 098765, whatever. Don't forget to put the date. In this case, it's January 10 of 2026 in our little story. And the people or the company we paid is such and such, where is it? Such and such game store, whatever. And we must put it in the payment column, $300. And the reason we pay that store is for entertainment expense. And again, if the list of accounts is very long, we type in ENT and we can see it filters it, and we can click on the name of the account. Now all we have to do is click Save. And when we go to Reports and we go to Trial Balance, we can see entertainment expense showed up for the first time as $300, and cash in Chase Bank decreased to $2,500. Now let's take a moment to look at the other reports that these transactions would show up on. First, we'll take a look at the profit and loss. If we click Reports and we go to the profit and loss that we set up, we can see that our total income for January so far is $3,000. The total expenses we paid for January so far is $500. Excuse me, it was $3,000. And then the total expenses you can clearly see is $500. I don't know if I have to zoom in a little for the audience at home. Okay, but you can see so far we should have remaining in our bank account $2,500, which is the difference from the income we've had in January minus the expenses we've had. And if we click Reports and we go to the balance sheet, we can see that we do have $2,500, and that's the only asset we have, and we won't look much at the balance sheet. But there are two other reports that we can look at to see details of all of the transactions that we have recorded so far. We can click Reports and go to Transaction List by Vendor. And right now, let me zoom out a little so we can see the report nicely. Right now, we've only had 2 transactions, one with each vendor. But clearly you can see that this shows you a list of every transaction for every vendor. So we've only had one for New York City Transit and only one for such and such GameStop, and it shows the details. If we click Reports and we go to the equivalent equivalent report for customers, we can see that McPayoff's Bar actually recorded 2 transactions for both of their deposits. So these list reports for customers and vendors really break down the detail and help you manage your relationship with that particular company or person. So here are 4 transactions for you to try yourself. Try to remember how to record them and do them exactly the way you saw us do it in the prior examples. When you finish, your trial balance should look like this. Every number should match, and if you have any different numbers, you have to use the techniques that we learned in prior videos to find and fix your mistakes and change the numbers so that your numbers are the same as mine before we go to the next set. You should also look at your transaction list by vendor. If you click Reports and you go down to Transaction List by Vendor, you should see, I'll zoom out a bit, that these are the results for Staples, because we had 2 transactions here for Staples, and these are the results for all the other vendors. Notice it's a nice little convenient list that'll give you every transaction that you made with that particular person or company. So if these numbers are the same and the trial balance numbers are the same, you're ready to move on to the next video.
Chapter 12. Finding things so you can fix them.
Now, before we start our very first exercise, I'm going to show you 3 great ways that you can find any of the transactions that you previously recorded. This way, if you're looking to find your mistakes after the exercise, you'll be able to sort and find your transactions much more easily. First, did you know that you could sort the register by any of the column names across the top of the register? Go ahead and click the date heading in the date column, and you'll see that the register changes from oldest to newest and newest to oldest. And that will help you if you're searching for any particular transaction. Secondly, if you look at the little icons right on top of the register, you have the ability to actually filter the transactions if you're looking for one particular piece of data within one particular transaction. Let me show you what I mean. So here we are in the register window, and you'll notice if you hover the mouse over the first 3 columns, a little triangle appears. That tells you that you can sort the entire register by only that column. For example, if you click the triangle over the date column, you'll see that right now you see the newest transactions, and as you scroll down, you get to the oldest. But you can switch that by clicking on the arrow again, and now you have the oldest ones on top and the newest ones on bottom. Now, I strongly recommend that the way you leave the register sorted on a day-to-day basis when you're working is to have the newest on top and the oldest on bottom. This way, when you enter a new transaction, you'll see it in front of you after you save it, and you won't have to scroll all the way down to see the latest transactions that you recorded. But you can also sort the register by payee. So if I click this arrow, you can see that all of the people, all of the transactions with the same people are clustered together. And that might help you find any transaction you recorded or figure out if you did or did not record a transaction for that particular payee. You can even sort it by type by clicking here, and now you get all the checks, then the expenses, then the deposits. So these are 3 ways to sort it that will help you find what you're looking for if you think a particular transaction is a mistake and you need to see it and possibly change it. But when you finish, again, I recommend you go to the top of the date column and click the arrow so that you get newest to oldest and sorted by date as you're working. Now, the other way to find things is to use the little filter icon here. That will filter out all of the transactions except the one you're looking for. Watch. If I click the filter icon, I can filter by transaction type, and I could say, show me only the checks. Apply. Boom. I see only the checks, and there's nothing else in this register. But I might want to see the expenses instead. So I click Clear Filter, click the funnel, and say, you know what? I want to see the expenses, not the checks. Well, let's see the deposits. Make it a lot easier. Deposits. Apply. See? Deposits. Whatever you want to see. Clear Filter. Now, this helps if you plant something in the memo field. You can then filter for that thing if you need to find that transaction. For example, if I go somewhere in the middle and I click for Zelda, and I say, I remember there was one particular deposit that I made from the money I got from Zelda where I typed in the word hello and I saved it. So there's thousands of transactions in this register, but I need to find the one where I typed in the word hello in the memo field. Watch. You can click the funnel right here where it says find, and you see it says memo. Type in HELLO and then click apply. And now the only transaction you see in front of you is one with the word hello in the memo field. So that's your second technique for finding things in the register if you need to fix them. And lastly, you should know that if you're looking at a report that shows a number that is a sum total of a specific set of transactions, you can always double-click right on that number and open up the entire list of transactions that added up to that total. That means if you go to the trial balance and you double-click any expense, you will get another report that shows you a list of every expense in that category that you recorded. Same thing for the income accounts. If you double-click, for example, on bouncing income, you will get a list of every transaction deposit that added up to that total that was shown on the trial balance. So when you look at your trial balance, all you see are the totals of the categories of the transactions. But watch, if I come across where it says income from bar bouncing and I hover the mouse over the money amount, that money amount is a total. That means if I double click, I open another report that shows a list of every transaction that has been recorded to that account. Notice we only have 2 transactions from MIC payoffs. Both of these were recorded in the register by us in a previous video chapter for these amounts respectively. So you can drill down and look more closely at a particular account to see if you made a mistake by putting in the wrong category, the wrong person, or the wrong money amount. Go again, reports, trial balance. Let's say, for example, you wanted to see food expense. Double click, and you would see every transaction. I moved ahead a little bit, so I have a February 1 transaction for food expense. But again, it wouldn't matter if it was food expense or supplies expense or anything else. Hover the mouse over the total number on the report and double click, and you'll see a list of every transaction that went into that account. And you could scrutinize and double check if you put the right date, the right person, or the right amount, or even the account name. So by using these 3 methods of finding the transactions, you will be better able to find and fix any mistake you might have made, whether it be on the exercise coming up or in your real books and records. And one last technique that sometimes helps people see things a little more clearly is making the register 1 line instead of 2. It's very simple, and you might be able to see the register more clearly, but you will lose the memo field and you will not be able to type in information or see it in the register. Watch. Right now, we can see that we have 2 lines for every 1 transaction. And I'm going to leave it like this for most of the course, not only because that's the way it looked when Grandma was online at the supermarket, but because if you leave it this way, you'll be able to put information in the memo field. Watch. If you make it more condensed by clicking in the top right by the cog wheel, and then click Show in 1 line, you can see that it's easier to see your list of transactions in the register. You can still add a new transaction, but unfortunately, there's no memo field. You would have to switch it back if you need to put something in the memo field or see it.
Chapter 13. Let's practice what we learned. So now, we will practice what we learned by doing our first exercise.
So before you start the exercise, you must make sure that all of your numbers in all of your reports are exactly the same as ours. If not, then you have to go back and watch the prior video chapters and use the techniques that we learned to find and fix your mistakes. This way, we'll all be starting with the same numbers, so we should all finish with the same numbers.
And before we start, please make sure that your trial balance is the same as ours. If not, you have to do what we learned to find and fix.
So this is what the trial balance should look like before you start the exercise. And again, if you don't have all of the same numbers, you have to rewatch the previous video chapters and use the techniques that we learned to find and fix your mistakes. This is what the transaction list by vendor should look like in your computer before you start this exercise. And again, any differences will help reveal any mistakes that you can go and find and fix. Same thing with transaction list by customer. These are the only transactions we've had where we received money from someone. So here they are, and if they're any different from your report, you have to fix it before you can enter the transactions that are part of this very first exercise. Now look, here are all of the transactions that you will record during your first exercise. There's only 10 of them, and you can see they're exactly the same as the ones we did together. The only difference is that this time you're doing it without the teacher, but I'm absolutely sure you can record these the same way that we did it when we did it together.
Make sure that when you finish, your trial balance looks exactly like this.
And if there are any differences, you have to use the techniques that we learned in the prior video to find and fix your mistakes, so that when you finish, you have all the same numbers that I do here. Same thing with the transaction list by vendor. Make sure your transaction list by vendor report looks exactly the same as this, and if it does not, you have to figure out by looking at the differences between yours and mine what mistake was made and how to go to the register and find it and fix it. And finally, here is the transaction list by customer after you finish this first exercise. And again, any differences will help highlight whatever mistake you might have made, so you can go back to the register window, find the mistake, and fix it. Now, the final piece of advice I have for you, if your trial balance does not exactly match mine, is to use simple logic. I mean the type of logic that you learned about in elementary school. For example, if you compare your trial balance to mine, and one of the expenses in my trial balance is higher than yours, but another expense in my trial balance is lower than yours by the same amount, that should give you some kind of clue as to what type of mistake that you made. Maybe when you were recording an expense, you chose one particular expense account instead of the other. So those two expenses would be the ones to examine to figure out which transaction you put the wrong expense account. What if you compare your transaction list by customer to my transaction list by customer, and one customer has an extra deposit that yours doesn't have, and one other customer is missing a deposit? Well, clearly, that's the deposit in question that you have to find in the register and compare to the transaction list given in the video to see if you recorded it correctly. These are the best pieces of advice I can give you, and I wish you good luck in your first exercise.
Chapter 14. Managing Credit Card Transactions. Did you know that keeping records of a credit card is actually the same as keeping records of a bank account?
That's absolutely true. When you think about paying from a credit card, it's exactly the same as paying from your debit card when the money comes from your bank account. With both a debit card and a credit card, you pay the money to the financial institution, then pay from the card that the financial institution provides. The only difference is that with a bank account, you give the money to the financial institution before you pay from the account, and with a credit card, you give the money to the financial institution after you pay the charges. That's the only difference. So it would stand to reason that the record keeping of both types of accounts would be exactly the same. So it would also stand to reason that the place that we record the credit card transactions looks exactly the same as the place that we record our bank transactions. Even in the days before the computer, your grandmother would use one register book for her bank account and a separate register book for her credit card account. And the credit card register looked almost exactly the same as the bank register. In the old days, there were 2 lines for every one transaction, and every time you swiped a credit card to charge something, you would have to record in the register the when, the who, the why, and the how much money, and the reference number that went with the transaction, exactly the way that we have been doing when we have been recording bank transactions. It's exactly the same. The only difference is when you look at a credit card register, the names of some of the columns across the top are slightly different, but the idea is exactly the same. So let's open up the register window for Serina's credit card and take a quick look. We go Transactions, then go down to Chart of Accounts. Well, actually, it'd be a lot easier if you just click the accounts created by you, and we can get right to Serina's Visa. And we go all the way across, and we double-click View Register. Now notice this is a credit card register, so the names of the columns are slightly different. You still have date, reference number, type, payee, and account. But instead of deposit and check or payment, you have charge or payment. And obviously, if you're going to record a charge, you would put the money amount in this column, and if you're going to record a payment or a credit or a reduction to the credit card account, you would choose that column. And just like the bank register, the choice of what type of transaction happens right here in the top left. So let's go ahead and record Serina's first credit card charge. So let's imagine on February 14th of 2026, Serina charged $80 on her Visa credit card to such and such gaming store for entertainment expense. And the slip number that came from the slip out of the machine after she swiped the card was number 272727. So what will be the result in the trial balance at the moment Serina records this very first credit card charge? Well, we know that we have $80 more of entertainment expense. Whether we paid by bank account or credit card, we paid $80 more for $80 more of entertainment expense. So entertainment expense will increase. We also know that Serina's Visa card will show up for the very first time on the trial balance in the amount of $80 because this was her very first charge and very first transaction with the card. Let's take a look at how to record it. So here we are again in the credit card register, specifically for Serina's Visa card, and we want to choose the transaction type expense. Expense is the transaction type that you choose when you're charging on the credit card. Now, of course, we're going to put the date February 14th of 2026 in our little story. And we remember the reference number is 272727, whatever. And we know the type is expense and the payee was such and such game store. And notice, because we chose expense, only the charge column is available. You might also notice that QuickBooks Online automatically put entertainment expense because it remembers that such and such game store is associated with the entertainment expense account because you recorded them together in prior videos, in prior transactions. So you could still change it at the moment you record the transaction if in fact it is different. So be very careful, because most of the time the same vendor gives you the same service or product and it goes under the same expense, but not always. So be careful. But now that we have recorded every step, we're going to save this. So we now click Save. So now the credit card has a balance of $80, and let's take a look at the trial balance to see if the results are exactly what we expected. We click Reports, and we go over to Custom, and we can see the results are exactly as what we expected. We can see that Serina's Visa showed up for the first time as $80 because this is our first charge. But look closely at the entertainment expense account. When we double click to open it up, we notice that most of the other ones were expenses, but this one, this last transaction on February 14th, charged to such and such game store, was a credit card expense. And if we scroll over to the right, we can see the account and which account paid from it and the amount by scrolling from the bottom scroll bar left and right, back and forth. So the result is exactly as what we expected. So now let's try her second transaction. Let's imagine on February 16th of 2026, Serina charged $220 to Bonnie's Brass Knuckles Emporium for job supplies, and just put it under supplies expense. And of course, they gave this reference number, and we would record this charge exactly the same way that we recorded the previous charge. But before we record the charge, let's think about what the results will be in the trial balance. We know that the balance of the credit card is going to increase by the $220 that we just charged. So when we open the trial balance after recording this charge, Serina's Visa should have a balance of $300. And we know that supplies expense should increase by $220 because we're putting this under supplies expense. So the result in supplies expense after she records this charge should be $520. So again, to record this in the proper register, we click Transactions, Chart of Accounts. It's a lot easier to see if we see only the accounts created by us. Serina's Visa is right there. View the register. And again, this is another credit card expense. So the reference number, I think, was 55443323, whatever. But the people whom we're paying for this particular transaction, gotta put the date. Gotta put the date at the beginning, because the date mistake is the worst kind to fix. So we go forward to February 16th. Make sure we're in 2026 in our little story. We have the proper transaction type. We have the proper slip number that printed on the slip that came from the credit card, and the payee. Now, the payee in this case is Staples. We're putting it under supplies expense, SU. Just type in the first two letters and it will filter it. And we'll use the one that we created, supplies expense. And the amount of the charge in this case is $220. And again, to save one field, but keep the transaction open, go to the left part of your keyboard and push Tab. Now we have the when, the who, the why, the how much, and the proper reference number on the slip. So all we have to do is click Save. And now let's check the results in the trial balance. We click Reports, Custom Reports, Trial Balance. See, mine isn't set up. And you can see if we zoom in The results are exactly as what we expected. You can see that Serena's Visa increased to $300 and supplies expense increased to $520. And the interesting part is if you double click the $520 and you go down, you see the last one was recorded, or second to last one, February 16th, recorded as a credit card expense with this slip number. And if you scroll to the right, you can see whom we charged, why we charged, and of course, which account the money was paid from to get the total of the supplies expense. So now we're going to make our first credit card payment. What do you think happens when you actually pay the credit card? Well, obviously, if you pay the credit card, the balance of the credit card account goes down. But guess what? If you're paying the money from your bank account, then the balance of your bank account will also decrease by the amount that you're paying. So let's look at a typical example. Let's imagine on February 18th, we paid Serena's credit card company, let's just call them Visa. We're going to pay them $200 on February 18th with check number 8. Now, there's a few things to discuss when we talk about what the result will be. First of all, when we go to record this in the register, this will be the first time that we will not be putting money in the charge column. We will instead be putting money in the payment column. In fact, we will only be able to put money in the payment column because we're going to choose that type of transaction when we first open the register. The only difference is there are two issues with two pieces of data regarding our first credit card payment. First, we don't have the payee on the list of vendors. We don't have Chase Visa as one of the vendors on the vendor list, so they're not going to come up on the pull-down menu when we click to put in the payee. What we're going to do is demonstrate how to add a list item like the name of a customer or the name of a vendor or the name of an account. We're going to learn how to add a list item on the fly. And on the fly means you add the item at the moment you're recording the transaction. So that's how we're going to handle recording the payee. But what about the account? What about the field under payee where we have to choose the proper account in the chart of accounts? Well, if we're in the credit card register because we're making a credit card payment, what do you think the other account is that will change in addition to the credit card account? And as we said a moment ago, the other account involved in a credit card payment besides the credit card account is your bank account, the bank account that you're paying the money from. So that's the account you will put on the line when you record this $200 credit card payment with check number 8. So again, we open the register window by clicking Transactions, Chart of Accounts, only the ones created by you, and we go Serena's Visa, click View Register. Now there's already 2 charges in here with a balance of $300. Now the type of transaction, the type of transaction we're recording is a payment. It's a credit card credit, not a bill payment, a credit card credit. You see, a bill payment would be different. A bill payment would be paying another vendor bill like an expense. So you don't want to choose that one. You want to choose credit card credit. Anytime you're recording a transaction that reduces the balance, whether it be a payment to the credit card or some kind of refund or return, any transaction that lowers the balance, you make this choice in the register. And of course, the date in our example is February 18. of 2026 in our little story. The reference number is the number on the document. And in this case, the document is the check that we're giving them. So we're going to put check number 8 because that's the number on the check that we're giving them from our bank account. And we're going to choose a payee. Now, the credit card company is not yet on the list of payees. And the list of payees in QuickBooks Online is the list of vendors. So here's how to add Chase Visa, the company, as a vendor to the vendor list on the fly. Every time you click a pull-down list, the top choice will have a plus sign and say Add New. So if you click on it, you can just type in the name, Chase Visa Company. And when you click Save, you'll see that not only can we use it for this transaction, but if you go back to the vendor list, Chase Visa will be on the vendor list. Now, which account is the other account involved in the transaction if you pay from your bank account to your credit card company? And the other account that changes, besides the credit card account, is your bank account. So, of course, you could type in CH to get the Chase bank account and the amount of the payment. Notice you can only put the money in the payment column because of the type of transaction you chose. We're decreasing the balance by $200. So we have the reference number, the date, the vendor. The reason why we're paying is we're reducing the bank account to reduce the credit card account, and the money amount. Now when we click Save, we can check to see if the results in the trial balance are what we expected. We can click Reports, and I'm set up this time to go to the trial balance. And if I just scroll in a little, okay, we can see that Serina's Visa is now down to 100 from what it was a minute ago, 300. If you double click, you can see that these were the two charges and these were the expense accounts, and then this was the payment, and this was the payment account that the money came from. Scroll across and you can see it properly lowers the balance, transaction by transaction. And the more interesting thing is if you actually double click your Chase bank account, you can see it actually records into the Chase account that this was a credit card credit. In fact, you can even go Transactions, Chart of Accounts, and reopen the bank account register, and you'll see that the credit card charge that you recorded in the credit card register got automatically copied over to the bank register because you recorded it and you used the bank account. So anytime you use the bank account in any transaction window, QuickBooks Online will copy that transaction right into this bank account's register. In fact, if you wanted, you could even record check number 8 in the bank register and choose Serina's Visa as the account instead of recording it in the Visa register and choosing the Chase Bank as the account. The result will be the same regardless of which register you record the transaction into. So now, why don't you try these 3 transactions on your own? They're almost exactly the same transactions that we recorded together. Almost. You can see with this last one, you have to think a little bit yourself. So go ahead and record them. Then, after you unpause the video, take a look at the trial balance I'm about to show you, and that will have the correct results of all 3 of these transactions. Now, I'm going to give you a little hint. The 3rd transaction is not exactly the same as we did together. It's the same idea, but see if you can record it without me revealing the answer, and then after I show you the trial balance, I'll explain exactly how you were supposed to have recorded that third transaction. And if you properly entered those 3 transactions by yourself, this is what the trial balance should look like when you finish. So now here is the final trial balance that you should have after recording the 3 transactions that you just did on your own. What about the return credit to the pet store? How did you record that one? Well, you know every other piece of information to record except one. The one piece of information I did not tell you was which account to put in the field of account when you're making a return. And most of you probably already knew the very simple rule. If this particular account is the account you chose when you charged, then if you're getting a refund or return for that charge, use the very same expense account. In this case, she was returning something that she had recorded as cat-related expenses. Therefore, if that was the expense that she recorded when she charged the transaction, if she's returning or getting some refund for that very same transaction, then that's the account that she chooses. And if you look at the trial balance and open it up, you can see that this transaction should lower that particular expense because it was a return or a refund. And that's how you record returns and refunds, credits and payments, credit card charges in QuickBooks Online.
Chapter 15. Using transaction windows.
There are other windows in QuickBooks Online that we can record the very same transactions that we've been recording so far. For example, when we wanted to record a deposit, we opened the bank register and we chose transaction type deposit. We can record that very same deposit in another window called the deposit window. And if we open the deposit window, you can see that it has all the same fields of data that the register has when we choose transaction type deposit. Once we choose deposit in the register gives us a field for the name of the person we are doing the transaction with, the income account, and the money amount that go with that transaction. And those fields are all the same in the bank deposit window. So if we recorded the same transaction in the bank deposit window, the results in the reports would be exactly the same. Now, the same is also true for the check or expense window. If we choose expense in the register gives us every field of data that we need to record an expense. But you can get those same fields of data if you open the expense window. You'll have a field for the date, the name of the person, the money amount, and the expense account that goes with that particular expense that you're paying. And if you record the exact same transaction in the expense window instead of in the register, the results in the reports will be exactly the same. And you can open up both of those windows, plus all the other transaction windows in QuickBooks Online, just by looking in the top left and clicking on the big fat plus sign that says New. Remember, when we learned how to navigate QuickBooks Online earlier in the course, you should remember that the plus sign that says New will open up all the transaction windows and day-to-day tasks that you would do in QuickBooks Online. So let's do our first example together. Let's imagine on February 26th of 2026, Serina received $450 from Dave Diakil for cat sitting deposited directly into her bank account. Now, what will be the result in the trial balance if we record this regardless of which of the two windows we could choose to record this in. Well, we know the bank account has $450 more, so the bank account will increase and become $2,680. We also know we earned $450 more in cat sitting income, so the cat sitting income would increase by $450 and become $2,050. But instead of recording this in the register, let's record this in the bank deposit window. From the top left, we click New, and we go all the way to the right where it says Other, and we click Bank Deposit. Now, the date is February 26th of 2026. This is the bank account that the money was deposited to. It was received from our good customer Dave Diakil, and the reason we received it was cat sitting. So we choose cat sitting income. The payment method was cash, and there's no reference number in this example. That happens sometimes. And the amount is $450. Now, how do we save this? Well, if I squash the window just a little, you can see in the bottom right of all of these transaction windows, they'll either be Save and New, or if you click the arrow, you can choose instead Save and Close. Save and New will save the window and wipe it fresh and keep the window open, ready for a new transaction. Save and Close will save what you put and close the window. Now let's take a look at the trial balance to see if the results are really the same. If we click Reports and we go down to Trial Balance, we can see, if we zoom in just a tiny bit, that the bank account balance is exactly as what we expected, and the cat sitting income is exactly as what we expected. In fact, if you double click and open up the account, you cannot tell the difference between the deposits that were made from the register window and the deposit that was just made from the bank deposit window. And that's also true if you open the other account. If we double click and open the bank account, you can see that this deposit all the way at the bottom looks exactly the same as all the other deposits that we recorded from the register. And the very same idea applies when you record an expense. For example, let's imagine on February 28, we paid $250 to Staples for supplies expense with a debit card swipe number 1234567. We will record this exact transaction the same way that we did in the register, but this time we're going to open the separate expense window from the plus sign. From the top left, we click New, and in the second column where it says Vendors, we go to Expense. Notice it has all the same fields of data. Okay, we paid Staples, and we paid from the Chase bank account. Be very careful. We paid on February 28th of 2026. We're paying supplies expense, but this time the amount is $250. Push the tab key to save the field and not save the whole window. Now, when I click Save and Close, we can examine the trial balance and see the same thing. Chase Bank just decreased by $250, and I can prove it by double-clicking and going to the bottom of the transaction report, and if you scroll all the way down, you can see the last transaction recorded in the Chase Bank account was February 28th, this expense to Staples, which lowered the balance from $2,680 to by $250 to $2,430. And you can see it is no different than any of the other expenses that were recorded when we originally recorded them in the register. And the same is true for the supplies expense account. If I go back to the trial balance and then go to supplies expense and double click, you can see that the other expense and the other checks and charges are recorded the same way in the account, and the result in the supplies expense account is exactly the same. Now, why would I bother showing you this? Why can't we just stick to the register? Well, there are two reasons. The first reason is that sometimes there are extra fields of data at the bottom of the transaction window that are simply not available in the register when you go to record that very same transaction. For example, if you look at the bottom of the deposit window, you have extra deposit features and options such as cash back. So if you had a complex deposit that we will not deal with, but sometimes you have to deal with that if you had a business, that complex deposit would not be possible unless you used the extra fields of data across the bottom. Now, the third and final reason why I'm showing you these windows is because of one of the greatest features in QuickBooks Online that I'm now about to show you. If you're looking at a list of transactions on any report and you double-click right on the face of the report to any one particular transaction, that transaction will reopen in the window that you originally recorded that transaction. That makes editing your transactions very, very convenient. However, the one thing you have to be aware of is that even if you originally recorded that transaction in the register window, when you double-click to reopen the transaction, it will not reopen in the register window. It will reopen in one of the windows that I just demonstrated. So if you're looking at a list of deposits and you double-click on one deposit, even if that deposit was recorded first in the register, it will reopen in the deposit window. Same thing for checks. If you're looking at a report with a list of checks and you double-click on one of the checks, the window that you entered it will reopen, but it will not reopen in the register window. It will reopen in the check window. Let me show you what I mean. But we know, for example, the very first deposit we did on January 7th, we know that one was recorded in the register window. But if I look at this after opening this from the trial balance and I double-click right on the line, the transaction will reopen, but it will not reopen in the register window. It will reopen in the bank deposit window, because that's the original window of entry, even though we recorded this January 7 deposit in the register window. When we reopened it from a report, it opened it in the bank deposit window so that we could scroll down and get to the extra fields at the bottom. Same thing with expenses. If I go back to the trial balance, if I go back to reports, trial balance, and I open, for example, supplies expense by double-clicking on the total number, I get a list of every transaction that ever went into supplies expense, and they all look the same whether I recorded them in the register or the expense window. Now, we know that the expense back on the 16th, well, that might have been, we might have done that in the transaction window, okay? But these checks were recorded in the register window because they were recorded at the beginning of the course when we only knew the register. But if I double-click to reopen the transaction, it will not reopen in the register window. It'll reopen in the check window, which we could have recorded this in by clicking the plus sign. And the result is exactly the same, so that we can scroll down and get to the extra fields on the bottom if we need them. But in my opinion, the most important thing that's included in a transaction window that's not available in the register is the ability to attach a file to a transaction. That's something you can only do with the transaction window, and I'm going to show you exactly how to do that in this next video chapter.
Chapter 16, Using the File Attachment Feature.
And now we're going to learn about one of the greatest features, not only in QuickBooks Online, but in any accounting program anywhere. Did you know that QuickBooks Online has the ability to attach any file in the computer to a transaction that you're saving? That's right, any type of file that's in the computer that would remind you of the transaction or at least clarify the transaction later, you can attach to the transaction when you save it. This way, when you reopen the transaction, you can look at the file and benefit from the information from the file that you saved with that transaction. You can attach any type of file to any transaction, but usually you want to attach the source document so you can open the file attachment list and manage your documents very easily. Now, usually, for practical purposes, the file that you usually attach to a transaction is usually a picture of the source document of that transaction. And in our case, most of the time the source document will be a paper receipt that comes out of the machine after you swipe your card. But it doesn't have to be. If it's an invoice, you can take a picture of the invoice or bill and save it with the transaction. In fact, it doesn't have to be a picture at all. It could be a video file that reminds you of information you will need to remember about that transaction later. As long as the file does not exceed the current file size limit, you can upload it and save it with the transaction right from the transaction window. Now, there's only one piece of bad news. You cannot save a file with a transaction if you're originally recording that transaction in the register window. In order to save a file or a picture of the receipt, which is what it normally is, to the transaction, you will have to record that transaction in the transaction windows that we just learned about and not the register. Now, that's because the register window does not have an icon that you can click on that allows you to upload the file to your QuickBooks Online and save it with that particular transaction. But the transaction window does. If you look at the bottom of the deposit window or the check window, you will see a little paperclip icon. And that's the place to click for QuickBooks Online to open up your computer and look into the folder structure of your computer to help you find the file that you would like to upload and save with that transaction.
You could install the QuickBooks Online app on your phone and upload it from there, or you can email it to yourself and download it from the cloud. Or you can plug in your phone to your computer with a USB wire and copy it that way.
So all you have to do when you have a transaction is take a picture with your phone of the source document of that transaction. And again, it's usually just a little paper slip that prints from the card swiper after you swipe your card. And once you take a picture, all you have to do is get that picture from the phone to your computer so that you can upload it and save it with the transaction that it goes with. Now, it's very easy to get the file from your phone to the computer. You could email it to yourself as an attachment, or you could upload it from your phone to some storage drive where you could then download it into your computer so that you can save it in QuickBooks Online. For example, let's imagine this is a picture of the receipt from the card swipe for the February 16th transaction that we had with Staples when we purchased supplies. Just go along with it, play along and pretend that this is a picture of the receipt for that particular transaction. Let us also imagine that a picture of this receipt is already in a folder in my computer. Let's take a look at how we would reopen the February 16th transaction and then attach this receipt to it so that if we ever needed to look back at the receipt, it would always be there, saved with the transaction. So now here we are back in the register window for Serina's bank account. And let's scroll down to the transaction in question. And we remember from prior videos, if we double-click anywhere in these two lines, we will reopen the data fields for that particular transaction, and we can change anything we want. But notice, there is no place to click in the register in order to upload a file. In order to be able to do that, we would have to click here on this Edit button, and QuickBooks Online would bring us to the original transaction window of entry, which in this case is the expense window. Now, all we would have to do is scroll all the way down and click this button, Upload from this device. Now, it used to have, the expense window used to have the little paper clip that I showed you a moment ago. And the deposit window has the little paper clip. But this changed into this little button that I can click on because it would not torment you properly the way a good program should if it didn't continuously change the name of the things you have to click on. So let's be tormented the way it wants and click Upload from this device. Now, once you do that, QuickBooks Online is looking through the folder structure of whatever computer you're sitting in front of. So I'm going to click Desktop, and I'm going to go down to Folder 15, where I have all the files for this particular video, and double-click to open it up, and okay, here it is, there it is. Double-click, and now you can see it uploaded this file as an attachment, which means if I ever want, click yes to save it, or it won't save it, but if I ever want to see that attachment or see any information about this transaction, click in either of the two lines to reopen, click Edit to go back to the original window of entry, and now when I click Show Existing, I can click Preview and get a picture of the file that I uploaded with that particular transaction. It's that easy. Now, another great thing about this feature is that QuickBooks Online has a separate window with a list of every single file attachment that you ever uploaded to this account in QuickBooks Online. And when you see the files you uploaded, unfortunately, you will not know which particular transaction they were saved with, but you can open them and download them from the list. So let's see together how this works. If we click in the cogwheel and go over to the column of lists and go down to the center where it says attachments, we can click and we get the window that shows a list of every attachment we ever uploaded in the history of this particular QuickBooks Online account. Now, of course, in this case, there's only one, but what we can do is view it and download it if we want. Unfortunately, there's no place to click to determine which transaction was saved with this file. But what you can do is you can click Download, and it will open in a different window. See, if I lower the browser, you'll see this is the original QuickBooks Online, and when I click Download, it opened the file as a picture in another window. Now, all you have to do is right-click, Save Image As, and you can choose which particular folder you would like to save the attachment in. Okay? Now, if I choose, for example, folder number 16, I can click on it and I can name it Receipt Downloaded. Enter. And now it's in that folder. So this is a handy tool that will help you. It's a real game changer. You'll always be able to open the proof of that transaction right from the transaction itself. But there's a couple of important points that I want to close with, and I want to give you the benefit of my experience regarding this issue. What I found regarding my clients over the decades is that it's very difficult to get business owners to remember to save every card swipe receipt that they've ever had for every transaction. Most people in business are really busy, and they really don't have time to make sure that every little card swipe they ever did has a receipt that's described and filed. However, it is necessary. What I found from my experience is that nowadays, people don't bother with the little paper receipt because they depend on the final statement that gets printed out from either the bank or the credit card company, and they point to the line item on the statement and they say, there's the proof of the transaction. Now, of course, that's some level of proof, but that's not really the best evidence. The best evidence of a transaction is the slip that came out of the card when you swiped the card. Now, ironically, I found that more often than not, people will save the slips and the receipts when they charge on their debit card, but when it comes to credit card swipes, they're more likely to rely on their financial institution and wait to get the credit card statement before either recording the credit card transactions or at least claiming some proof that the credit card transactions actually happened. That is the worst thing you can do. The whole point of getting the slip is so that you can compare it with the statement that the credit card company gives you to check if the charge is legitimate. So if you don't save the slip and you just say, I'll wait until I get the credit card statement and record your credit card transactions from the statement, do you know what that's like? That's like asking the fox to guard the henhouse. That's like asking the elephant to pass around the peanuts. That's like asking the burglar to install and manage your house alarm. That's like asking the drug addict to guard the medicine cabinet. Yes, the point is that the very people whom you're trying to protect the records from are the very people whom you're relying on for the records. In other words, it's your job as the bookkeeper to make sure that the credit card statement is accurate. And the only way to make sure that the credit card company did not add an invalid charge that shouldn't be there or charge you for something that they shouldn't is to make sure that you compare everything on the credit card statement to every slip from every transaction that you charge. Otherwise, you don't have proof against the credit card company if they put something on your statement that should not be there. So the file attachment feature will always help protect you as long as you remember to save your receipts and upload them to QuickBooks Online.
Chapter 17, Managing Your Cash on Hand. Did you know keeping records of your cash on hand is actually the same as keeping records of a bank account?
The cash that you keep with yourself needs to be accounted for the same way that the cash in the bank account needs to be accounted for. But some people keep their cash in different places. You could have one stash of cash under your mattress, and a different stash of cash in a safety deposit box at the bank, and another stash of cash hidden somewhere in your jacket pocket hanging in a closet, or however you hide your money. Now, if you want, you could have a separate account in the chart of accounts for each of the different piles of cash that you're hiding around the house or somewhere. But most people only account in their records for the cash that they have in their wallet, because usually it's the wallet that you spend from on a day-to-day basis as you're walking around spending. Now, the cash that you keep with you can be called anything. When you make an account in the chart of accounts, any name you want to give is fine. You could call it my pile of cash, my stash of cash, my secret cash, whatever you want to call it. But the account type for that particular account must be the same as the account type for your bank account. Think about it. Managing your cash on hand is exactly the same as managing your money in the bank. You deposit money into the bank the same way that you take money and put it into your wallet when you get it, and you can spend money from your bank account the same way that you could spend money from your wallet. So keeping records of your wallet and the cash therein is exactly the same as keeping records of a bank account. You may notice the only difference in account type is the detail type. And again, for our purposes, if you choose a different detail type, it will not make a difference. But it's nice, for clarity's sake, when you look at the chart of accounts, to see that the cash on hand account has a different detail type than your normal bank account. So it would stand to reason that the cash account would open in a register window exactly the same way that your bank account opens in a register window in QuickBooks Online. And of course, every time you take money from the bank and put it into your wallet, you will record in the cash account register a deposit to the wallet. And of course, every time you spend from your wallet, you'll open the cash account register and record an expense. Now, before we get to our actual examples, there's one particular point that I absolutely must stress. When it comes to cash transactions, saving the receipt is more important than saving any other document from any other transaction type. We already discussed why it's important to save receipts from other types of transactions, like a bank debit card swipe or a credit card swipe. But when it comes to a cash transaction, it's even more crucial that you save the receipt, take a picture of it immediately, or maybe you want to write some notes on it before you take the picture, and immediately save it with the transaction in QuickBooks Online. That's because with the previous types of transactions that we work with, even though your best evidence is on the slip that comes from the machine, because that's actually the receipt, if you wait for the transaction to clear a statement, like a bank statement or a credit card statement, that's still some level of proof, which isn't bad. So if you lost the receipt for a debit card swipe or a credit card swipe, you would still have some level of proof about the details of the transaction when you got your statement. But when it comes to cash transactions, there is no statement coming in the mail later. Your only proof of any kind is the actual receipt that you get at the moment you pay. That's why it's super important that you write on it whatever you're going to write on it immediately take the picture and save the file with the transaction. Otherwise, if someone thinks the transaction did not exist, you would have no proof. Now, of course, if you lost the receipt, sometimes if you're lucky, you can go back to the merchant or the service provider that gave you the receipt, and maybe they might be able and willing to give you a copy. But that can't happen all the time. So be super careful with your cash receipts. So let's imagine on March 1 of 2026, Serina went to the ATM machine and she withdrew $500 from her bank account and she physically placed it in her wallet. Again, don't forget to take a picture of the slip, and the ATM slip number is 1, 2, 3, 4, 5, 6, 7, 8, 9. So, what will be the result in the trial balance after Serina takes $500 from her bank account and puts it into her wallet? Well, we know the bank account is going to decrease by $500 and become $1,930, and we know that this is Serina's first transaction with her wallet, so Serina's wallet will show up for the first time as $500. So let's take a look at how to record it. Here we are in QuickBooks Online, and of course, we know we can go to the transaction and go to chart of accounts. And in the chart of accounts, here it is, Serina's wallet. So we click View Register. Now, of course, it's empty. And this first transaction where you're putting money into the wallet is a deposit. Because from the point of view of Serina's wallet, money, which is what we're keeping records of now, money is coming in to the wallet. So we choose transaction type deposit. And the date, of course, is March 1 of 2026. And there is no payee. You can leave it blank, or you can put Serina's name on the list of customers and vendors if you want Serina's name there. But the other account involved in this transaction, as we just said a moment ago, is the cash in the bank at Chase. So we type in CH to filter it, Chase Bank. That's the other account that's changing along with Serina's wallet, because that's where the money is coming from. And this is a deposit to Serina's wallet for $500. And of course, the reference number, they don't really give you a field, so you can put in the memo field whatever reference number you like. Now, when we click Save, the result in the trial balance is exactly as what we expected. We can then click Reports and go to the custom reports for the trial balance, and you can see the numbers are exactly as what we expected. Cash and bank account went down to $1,930 because the $500 came out of the bank, and Serina's wallet showed up for the first time as $500. So now we'll do our first example of Serina spending cash from her wallet. Let's imagine on March 2nd, Serina spent $50 from her wallet at Sri Chinmoy's Vegetarian Restaurant. Well, we know that's food expense, and we know the cash in the wallet goes down, but don't forget to include receipt number 7788991, because remember, any cash expenditure, the receipt is the most important thing. So, first, let's predict the numbers in the trial balance. We know that if Serina spends $50 more on food, her food expense will increase by $50, and it should become $220. But we know if Serina spent $50 from her wallet, her cash in wallet would go down by $50, and the $500 balance would decrease to $450. And these will be the numbers in Serina's trial balance right after we record this first cash expenditure. So, we already know what to do. We know we go to Transactions, and we go to Chart of Accounts, and we scroll down to Serina's wallet, and we click View Register. Now, this is an expense that we're adding. Okay, you're never adding a check. You're adding an expense if you're recording it in the cash on hand register. The date that we actually spent this money was March 2nd of 2026. And the reference number, what was it? 7788991, whatever. Okay. But the people or person whom we paid is Sri Chinmoy Veggie Restaurant. Now it's interesting. Sometimes QuickBooks Online will pre-fill and sometimes it won't. It depends on how you answered the pop-up question in previous transaction. So in this case, it remembered food expense went along with Sri Chinmoy, but you have to double check that to make sure that you're purchasing the same thing this time. In this case, we are purchasing food, and the amount that Serina physically paid in cash from her wallet was $50. So we fill out the fields in the register just like we've been doing all along, but the difference is when you click this save button that you could probably see a little more clearly in your computer, it saves it and changes the balance. And notice the balance of Serina's wallet is now different. And we can check the trial balance and confirm if we click Reports, Custom, Trial Balance, we can see that Serina's wallet decreased to the number we expected, $450, and her food expense increased to the number we expected, $220. Now, for good measure, let's try another one together. Let's imagine on March 3rd, Serina paid $30 from her wallet to Jewel Car Service for an emergency ride home in the rain, and they did not give her a receipt. Sometimes that happens, but you have to record it properly anyway. So let's record it the way that we know how. We go to QuickBooks Online and click Transactions, Chart of Accounts. We go over to Serina's wallet and click View Register. And of course, we're adding an expense. And the date that we paid this expense is March 3rd of 2026. Now, the people whom we paid are Jewel Car Service. And we notice that Jewel Car Service is not in the vendor list, so we're going to add the vendor on the fly. We scroll up and click Add New and type in Jewel Car Service with an R. Good. Spelling doesn't count. Save. But the reason she paid certainly is in the chart of accounts. Type in TRA and it'll filter it to transportation expense. And the money amount that she paid was $30. And you have to accept sometimes you don't have a receipt. So you have to think of some other way to prove it if necessary. But of course, you'll see the green save button more clearly on your screen. And when we click save, we can check that it was properly recorded in the trial balance. First of all, her bank account went down to $420 the way it should. Look, if we click Reports, Trial Balance, you can see her bank account is $420. Now, if I zoom in a tiny bit for clarity's sake, and I double-click Serina's wallet, you can see that these are expense type of accounts, just like they were before, okay? Now, when I also double-click transportation expense, you can see that previously she wrote checks to MTA for those Metro cards and so forth. But for this particular one, we're going to have to scroll it across here. My scroll bar is not working. For this particular one, she paid expense. And if we scroll across, you can see that these other two transportation payments were paid from her bank account. But this particular transportation to Jewel Car Service was paid from her wallet. So that's how it's displayed. And if we go back, and actually I want to show you, If you double click on this expense that you can see was recorded like any other expense, it does not open in the register window. It instead opens in the expense window, just like we learned in previous videos.
Chapter 18, Creating and Managing Your Personal Home Budget. Now this is the feature that's really going to help you get everything under control.
So it's actually very simple to manage budgets in QuickBooks Online. You see, each budget is simply a data sheet where you input your limitations for the expenses and your expectations for the income that you expect to have in the future. And they can be any numbers you want. Then QuickBooks Online will generate a separate report for each budget data sheet that you set up, and each of those reports will compare your actual results from your actual transactions to each of the different budget data sheets that you set up, so you can run different scenarios and really get a handle on your financial position. So here's an example of what a budget would look like. Notice the column headings across the top are the names of the months of the year because they divide the budget by months. But notice the row headings on the side are the names of the accounts that you are budgeting for. That means they're the expenses where you want to put limitations and income that you want to forecast how much you will get. Now, when the columns of the months cross the rows of the accounts, they make the little boxes, and those are the places for you to input your budgeted and expected amounts. Now, at the moment you go to create your first data sheet budget, QuickBooks Online will ask you, what specific fiscal year does this budget apply to? Now, don't worry if it's only part of a particular year. You still have to choose a specific fiscal year. And you also don't have to worry about how far in the future or the past that year can be. It can be any year you want. And the only other question QuickBooks Online will ask you at the moment you create your first data sheet budget is, do you want this budget to be an annual budget, a quarterly budget, or a monthly budget? Now, of course, most of the time, whether it's personal or business, it's a better idea to make a monthly budget. Because if you make a quarterly budget, you can only input the totals for the quarter and you can't split it into a monthly budget. But if you make a monthly budget, it can be condensed and summarized into a quarterly or annual budget. So these are the example numbers that we're going to put in for Serina's first budget. 2 months should be enough to make a point, and we will call the budget second quarter budget. But when we first open the budget window, it's very important that you know how to navigate and manage the budget window. So let's open it up for the first time together. We go to the cog wheel and click on it, go over to the column of tools and go down and click budgeting. Now, of course, if it's your first time coming to the window, you need to look at the little picture and click create budget. Now, we want to create a budget that's profit and loss, which means we want to know how well we're doing and compare our income and expenses, or actually our real income and expenses, to what we want our income and expenses to be. So we leave it there. But every budget must be associated with a specific fiscal year. So in our case, we're going to choose 2026. Leave all the other defaults because they're not relevant for us. And of course, you can explore changing them later. And then we're going to click Next. Now, here we are in the budget window, and we're about to put in the amounts. But there are 2 things that you need to know first before you start inputting the budgeted amounts. First, you need to give it the proper name. Now notice QuickBooks Online gave it a default name, but we'll click the pencil and put in the name that we want by removing the characters and typing in Serina second quarter. And you could put any words you want and then click Save. Now notice that's the official name of this specific data sheet that will be assigned for just the first quarter of 2026. Now, the other very important thing you need to know is how to manage the rows. It can be very tricky because you cannot filter and bring up the specific account you want to put in the budgeted amounts. What you have to do is click the arrows on the side to collapse the categories. Watch. If I click the top one, accounts, I click the up arrow, becomes a down arrow. Now everything is condensed, and you could see there are 6 or 7 categories of accounts. Now, the proper way to manage this is to input one category at a time because you could get lost. So if I click the down arrow, notice it expands and opens up the income section where we can put in the forecasted income amounts. If I click the up arrow, it condenses the income section. So we'll do the income section first. We'll expand the income section and we'll come over to the numbers we're going to put in, and now we're going to put them in together. Cat sitting income 500 for April and bar bouncing income 700 for April. No problem. We come here, cat sitting for April, and after you expand the income section, QuickBooks Online will remember that when you come back to this budget, you want the income section expanded just like we did. Watch. If we close the budget window, we're now back at the budget list. In fact, even if we left the budget area completely and we click the cog wheel and click budgeting and came back to the budget list, we would see a list of every data sheet budget that we created. Now, right now, there's only one on the list. And if we double click any budget, we go back into that budget and notice QuickBooks Online remembered that we want only the income section expanded. Well, actually, you know what? Turns out that's not true. It actually reopened the other sections. So I guess that's a change in the default behavior of the window. But we have the income section open, and we're about to put in the income for the budget for April and May. Now, if we come here to this presentation, we see that I have prepared numbers for the Serina second quarter budget. And I feel 2 months is sufficient for us to learn the idea. Now, notice it starts with April and May. So what we can do in the budget window is scroll over so that April and May line up with the row headings here. So now we have April and May, and we can put in April cat sitting income and April income from bar bouncing. You can actually expand the names on the left by coming to the left column, the top right of the left column. See how you get the double arrow? Click and pull it out so we can really see the account names. So what was for April and what was for May for cat sitting and bar bouncing respectively? 500 and 700. No problem. We put in 500, push the tab key. It actually moves to the right, so we're going to click under that. Income from bar bouncing, we expect 700 for April. But for May, let's take a look. We expect cat sitting to be 1,400 and bar bouncing to be 1,850. So we go back, cat sitting we expect to be 1,400, and we expect bar bouncing to be 1,850. And now we did the income section. We can collapse the income section. Now we can do the expense section. So we can collapse the cost of goods sold section and open the expense section. And here's again a piece of advice. click the up arrow and collapse all of the subsections of the expense area, because our accounts that we're working with are not sub-accounts and subsections, and will be lost going through this ocean of sub-accounts in the expense section. So get used to pushing the up arrow here so that you collapse everything. And notice the expenses that we're using all are written in capital letters, so they're much easier to see. Again, that helps you when you're in a situation that you can't filter, like here in the budget window. So what are the expenses that we expect to be our limits for April? Well, we have entertainment at $1,200, food at $220. So is it up here? Entertainment for April, $1,200. And food for April, we expect to have $220. What are the other expenses for April? Jewelry, $200, supplies, $500. Okay, jewelry, $200. Supplies expense for April, we expect to have $500. Anything else? And transportation expense, we expect for April to be $300. Now notice the May expenses are a little bit different. We can sometimes budget something for 1 month and have no limit the next month. Cat-related expenses, $125 for May. That's not a problem. Come back up here. Cat-related expenses, come across to the row of May. $125, okay, but we didn't budget anything for April for cat-related or clothing. $400, clothing, $400. So some months will have no budget limit, and that's what this is illustrating. Entertainment expense, $800 for May. Okay. What else? Food expense for May, $170. Food for May, $170. And of course, jewelry for May. We don't have any jewelry for May, but we have supplies and transportation. Supplies for May, supplies, $200. And transportation expense for May, our last budgeted number, $350. And now we simply save the budget. Now, the great thing is that if we close the budget window after saving and reopen it after saving, it remembers all the numbers we wanted. But the important thing is to run the report to compare the budgeted numbers for that period of time to the actual transactions. And this one will look a bit silly, and you'll see why in a moment. When we click this cogwheel here, we can, the report is actually in the reports area. If we close this out and we go to the left panel and click reports, and if we have not saved the budget versus actual report yet in our transaction list, we go to standard. And then when we go to business overview, we can get budget versus actual right here. Click on it. Now, when you open the budget versus actual report, you're going to have to choose the particular budget that you created. Okay, Serina second quarter was the only data sheet we created so far, so that's the only one this report can select. So notice when we look at the second quarter numbers for April and May, we notice the entire amount is all over budget or under budget. You see, it's negative if it's under budget, and it's positive if it's over budget. And the percent difference are all zero. And of course, we know the reason why. We didn't enter any transactions yet for April and May of 2019. 2026.
You can also make a budget data sheet for past transactions as well.
So because this feature is so great, we will now make a first quarter budget for Serina, and now we'll be able to compare it to actual numbers because we actually recorded transactions in the first quarter of 2026. So here we have the example numbers that I'm giving you to create your first quarter budget for Serina. And I'm going to stay with you to start you off. But you should be able to put in the rest of the numbers yourself, save the budget, and then come back to me so we can compare the actual first quarter numbers to the budgeted numbers we're about to put in. So here we are looking at the example numbers for Serina's first quarter budget. And of course, if we click the cog wheel and we go over to the tools column and click budgeting, we see right now there's only one on the list, but we're going to create another one that will be on this list when we come back. So we click create budget. And of course, we want it for the fiscal year of 2026 and leave all the other defaults and click next. Now, again, I strongly recommend the very first thing you do when you're creating a budget is give it a name so you don't get confused. And let's call this one Serina First Quarter. And then when we save it, we'll have no problem because it's the only one with that name. Now, remember, you can collapse the income section or open it up and then go ahead and type in January's income. So if we come back here, we have 600 cat sitting and 250 bar bouncing in January. 600 cat sitting, 250 bar bouncing. And now I'm going to do the rest myself. And then when you finish, you'll be able to compare reports with me to see if you did your budget right. So now, after pausing the video, let's take a look at what the budget should look like. From the top right corner, we click the cog wheel, we go over to Tools and click Budgeting. And now we have two data sheet budgets on the list of budgets in the budget window. So let's double click on the one we just made, first quarter, and you see here are what the income accounts should look like. And unfortunately, even if you collapse all of the sub-accounts for expenses, it would still be very inconvenient to scroll through so many rows. And again, the budget window does not let you filter the accounts the way that some other windows do. But there is a solution. If you come up to the top right and click the cog wheel, you can click the box Hide Empty Rows, then click Apply. That is super convenient, and it will condense only the rows that you're working with together in one scene so that you can handle that. Now, of course, if you're missing one of the expenses, you can click the cog wheel and unhide and click Apply. So you can go ahead and find that expense and put in a number. But once you put a number in the row and save the budget after putting the number in the row, you can then click the cog wheel, hide empty rows, and apply. And that will help you manage the budget window and not have to deal with many, many, many irrelevant rows. Now, once you're completely done, you click Save, and you can close this and come back to the list of budgets. So the way to get to that report is to scroll to the right so you can get the pull-down arrow for that particular budget data sheet. Click the pull-down arrow and click Budget, Run Budget versus Actual Report. And here we are. Here we are, January 26. Here's what we actually recorded in this course as transactions. Here's what was budgeted. Here's the amount over budget. And here's the percent over budget. Okay? So, yeah, they subtracted out. Now, notice the expenses. Notice some expenses were budgeted for and some weren't. Let me zoom in a bit. You can always zoom in your browser. Certainly. Boom, boom. Okay, that's nice. So you can clearly see the difference in supplies. Now, if we were way under budget, the difference is a negative number. If we were over budget, the difference is a positive number. But no matter what, it will say the percent difference whether you're over or under. And look, this is just for January. If I scroll over to the right, I can line up February's numbers with the row headings, and I can see each of February's expenses, what was budgeted for, the amount over, the amount under, the percent over, or the percent under. So you can see this is what really reveals what's going on. This really reveals where there's spending out of control or income that you're losing potential income from because you expected more and you need to investigate why it's less, and so on. So having this will help you have total control over your personal, non-business, family finances.
Chapter 19. Now, let's do our second exercise set.
And now it's time for us to check how much you learned and remembered in this course. So, we're going to give you a set of transactions that are a mix of each of the different types of transactions that we've already learned. Some will be bank account transactions, some will be credit card transactions, and some will be cash on hand transactions. And they'll be mixed around in the transaction list for you to really see if you know exactly what to do when you're recording any type of transaction for personal, non-business home finance. Now, this is what your trial balance should look like at the moment you start the exercise. Don't start recording transactions unless all of the numbers in your trial balance are exactly as what you see here. If they're not, you have to go back to the prior video chapters and do what we learned to find and fix your mistakes so that you're starting this big exercise with all the same numbers. This is what the transaction list by customer should look like before you start. You should make sure that all of the deposits are correctly associated with the right person or the right company before you start recording transactions for the exercise. And again, if you have a different report, you have to use what we learned to find and fix. And lastly, this is what the transaction list by vendor should look like before you start this exercise. Notice there's a lot because we had a lot of transactions with our vendors. Make sure that even if your trial balance is correct, make sure that you still chose the correct vendor for each transaction, even though the balances of your expenses might match the trial balance that I have. This way, all your reports match before you start the exercise. Now, here's the transaction list, and you need to go through it very slowly and very carefully. I promise you, every single one of these transactions is a transaction type that we learned about in a prior video chapter. So if you attempt to enter one of these and you find that you can't remember, what you need to do is go back to the video chapter of that particular transaction and watch the chapter and remind yourself of how to record it. Once you remember, you can jump forward to this big exercise and go ahead and record the transaction that you just reminded yourself how to record. Now, when you finish, this is what your trial balance should look like, and these should be the finishing numbers. And again, if you have any different numbers, you have to go back and use the techniques that we learned to find and fix to make sure your trial balance looks exactly the same as mine right here at the end of the exercise. This is what the customer balance detail should look like after this exercise. Make sure you did not record a deposit from the wrong person or the wrong place. This is what the transaction list by vendor should look like at the moment you finish the exercise. Remember, it's possible that your expense balances could be correct, but you still chose the wrong vendor when recording a transaction. So, you also have to compare all of the transactions in your transaction list by vendor to mine to make sure that all the transactions were recorded with the correct name. Now, if you do finish with a difference, of course you're going to use the tools that we learned about in prior videos to find and fix your mistakes. However, I might be able to save you a little time by giving you some tips and tricks on how to use logic to more quickly figure out what your mistake is so you can more quickly find it and fix it. For example, if you finish with all the numbers the same as mine, but your cash and bank account is too high and your cash on hand or in Serena's wallet is too low, but all the expenses and all the income accounts are correct, what mistake do you think you made? Well, logically, for one of the transactions, you recorded it in the Serena's wallet account instead of in the cash and bank account, or vice versa. So, if you think one is too high and the other is too low, you either included a deposit in the one that's too high that you should have never recorded there, or included an expense in the one that's too low that should have been recorded in the other account. Same thing with the credit card account. If the balance of the credit card account is too low, you might be missing a charge. And if your bank account is too low by the same amount, it might mean that there's only one transaction that you have a mistake on where you recorded it as a reduction to the bank account instead of a charge to the credit card. And the rest of the logical points are quite easy. What if all of your accounts, like your bank account, credit card, and cash account, are fine, but one expense is too high and the other expense is too low by the same amount? Obviously, you recorded a check or an expense using the wrong account. What about this? What about one income account is too high and the other is too low? You obviously chose the wrong income account when you recorded a deposit. So even if you deposited it into the right bank account, you might have chosen the wrong income account for that one particular transaction. And again, it's very possible to have all of the balances of your expense accounts correct, but you still could have chosen the wrong vendor or vendor name when you recorded that check or expense. So that's why you have to carefully go through the transaction list by vendor for any mistake that's hiding there if you accidentally chose the wrong vendor for a particular expense. If you did, that vendor would have an extra transaction when you compare your report to mine, and the vendor that you should have recorded the transaction for will be missing a transaction in their transaction list by vendor. So think about the logical points and the reasoning behind it if in fact you have a difference, because that should help you get right to the difference that you have and fix the mistake immediately. I wish you good luck with your exercise, and I will see you in the next video chapter. Chapter 20, there is also no Chapter 20. It was also not very interesting and didn't make the cut, so it's not here right now. It's probably out having drinks with Chapter 6, which, as you remember, also didn't make the cut earlier in the video. So now, without further delay, I proudly present Chapter 21.
Chapter 21, Purchasing Assets.
When you pay to purchase an asset, physically recording that transaction in QuickBooks Online is exactly the same as recording any other expense or any other check. The only difference is, at the moment you record the transaction, the type of account category that you will choose will not be an expense. Instead, the account type will be an asset. That means that before we record purchasing the asset, we have to have the asset account in the chart of accounts so we can select it at the moment we record the purchase. But before we go to the chart of accounts and create an account type asset for the item we're purchasing, we have to make absolutely sure that what we are purchasing is an asset.
So, at the moment you pay, ask yourself, is this an asset or an expense?
But how can you know the difference? Well, there's a very simple rule to follow to determine if you're paying for an asset or paying for an expense. If at the moment you're paying, you have already used the value of the service or whatever you paid for, then at the moment you pay, you have an expense. But if at the moment you pay, you still have something of value that you can use into the future, then you have an asset. Now, usually it's pretty clear if you're paying for an expense or paying for an asset. Expenses are things that usually occur again and again, and these are the typical monthly services that you pay for, like electricity or cable or telephone. And of course, if you buy an asset, it's pretty clear what is an asset. If you pay money to buy a house, you still have the house, you can use it into the future, so the house is an asset. If you buy a car, you still have the car after you paid, so you can use it into the future, and that's an asset. So when it comes to home finance, it's much more clear if you're paying for an asset or paying for an expense, and that will help you choose the correct account type when you record purchasing the asset. Now, just 2 quick points that you need to know about assets. First of all, an asset that you buy does not have to be something that you can physically touch. There are intangible assets that Serina could own. For example, she could buy the copyright to a song or a patent to an invention. Anything you pay for that you own and has value, even if it's intangible and you can't touch it, is still an asset.
Pets are also assets because unfortunately, the human race is still buying and selling them.
You a good asset.
Secondly, it's very important to know that there are basically 2 classifications of assets. There are assets that we call current assets, and there are assets that we call fixed assets. And the general difference is the expectation about how long you will hold on to these assets. A current asset is an asset that you expect to use up or be done with, let's say, within approximately a year's time. However, a fixed asset is an asset that we expect to have physically with us for longer than 1 year. So, of course, if Serina purchases a bicycle or if she buys some furniture for her room, those would be clear examples of fixed assets. But current assets could be anything she expects to use up. And of course, the cash in her wallet and the cash in her bank should be classified as current assets because money is constantly coming and going into and from both of those places. So now let's do an example. Let's imagine on March 24th, Serina paid $700 to Beckett and Becky's Bicycle Outlet. That's a new vendor that we can add on the fly. $700 to Beckett and Becky's Bicycle Outlet to purchase her first bicycle. And let's imagine she charged it on her Visa card and they gave her slip number 5544661. So we know that before we can record purchasing a fixed asset, we have to go to the chart of accounts and create a new fixed asset account so that we can use it when we record this transaction. So we know to open the chart of accounts, my favorite way is to click the cogwheel and go over to where it says chart of accounts. Now we're making a new account, and the account name will be, so we'll leave it in capitals, Serina's bicycle. Okay. Now, of course, the account type is fixed asset. And remember, I told you the detail type is not as important and won't make a difference, but you might as well use the right one or use a simple one. So let's just choose other fixed asset and then click save. Now we have it on the list, and if we choose only the accounts created by us, we can see that if we sort it by account type, fixed asset is in the asset section on top here. And now we're ready to record it in the register, in her credit card register, and purchase the $700 bicycle. So we know we can go down to Serina's Visa and click View Register. And we know we're adding a credit card. Even though this is an asset, not an expense, the type of transaction you would put is expense. Of course, if you were writing a check from the bank account, you would put check. But in this case, expense means how to record it in the register, not where it will be classified on the financial statements, because you're still paying for an asset. So we know that the payee, we have to add on the fly, Becky and Beckett bicycle outlet, whatever. Spelling doesn't count in this class. And we know that the account is the asset account that we created, SE to filter it. And here it is, Serina's bicycle. And it was a charge of $700. So this is the way you would fill out the register. And if you wanted the memo field, you would have to click here and you would have to add the memo field, or you would have to switch it back to showing it in two lines per transaction rather than one. So I can click save. And now when I go to reports and go to trial balance, you can see the result is exactly as what we expected. Serina's bicycle showed up for the first time as $700, and we can see that her Visa balance increased by the amount of the $700 and became exactly what we expected, $1,285. Let's try a second example. Now, in this second example, we will imagine we're purchasing a current asset. And to make the example improve our skill set, we're going to add both the vendor and the account on the fly. That means we add them at the moment we record the transaction. So let's imagine on March 29th, Serina paid $1,000 from her bank account with online transfer number 123456789 to the vendor called Charles Shrubbery. And she gave him $1,000 to purchase $1,000 worth of stock in a very large corporation of America. So that would be an example of paying for a current asset, and let's take a look at how to record it. So, of course, we would go to the chart of accounts as usual. And of course, we open the Chase bank account because that's what we're paying from. Now, I have it in one line, but as you remember, you could show it in two rows rather than one. We can remove this check mark, you see. And now it looks the way we were using it all along. Now we're going to add an expense to the Chase Bank register. And the date that we gave the money to Charles Shrubbery is March 29th of 2026. And the online reference number is 1234567, whatever. The point is that we're going to add this vendor on the fly by clicking the payee arrow and click add new, and spelling doesn't count. Okay, and you can come back later to the vendor section to put the website and email address and phone number and so on. But the account you're going to add on the fly, because every list item, when you go to record a transaction, every list item, you can scroll up and click add new, and this is a current asset. So you'll choose other current asset because it's not a bank type of account. And the detail type will be as close as we can get because it really doesn't matter. You should really just choose other current asset to avoid problems. And the name will be stock in big company. That's enough for now. And we click save and close. So we added 2 list items at the moment we were recording the transaction, and the amount we paid is $1,000. And we click save. Now let's check to make sure it was recorded properly in the trial balance. We click reports, and when we look at the trial balance, we know for the very first time, at this point we should know what the results should be, and you don't need me to predict it. Stock in the big company showed up for the first time as $1,000, and the Chase Bank account decreased by $1,000 because a moment ago it was $2,830. So that was easy enough to record, just like we recorded any other transaction. However, there is an important question that's probably on your mind. What if, before the next date of the balance sheet, the market price of Serina's stock completely crashes? What do we do? The answer is we do nothing. That's right, because in accounting, it does not matter what you could sell the asset for. It does not matter what the market value is. You can only record the assets for the amount that you paid. And when you report your numbers on a balance sheet or any other financial statement, you can only report your assets for the amount that you actually paid. Now, this idea spills over into business accounting, and it's something called the historical cost principle. It's a principle that states that you must record and report only what you paid for an asset, because the market value of assets is too volatile and it would not make consistent financial statements that you could compare month over month if the value of the assets were changing erratically and it had nothing to do with your behavior or anything that you did when you're trying to succeed in business.
Chapter 22. Selling assets at a gain or a loss.
Now, previously in the course, we recorded receiving money when we earned it as income. And when we used the deposit window, we chose the income account in the field of account category, because that was the reason that we got the money. This time, we got the money from selling an asset. So logically, instead of putting an income account in the account category in the deposit window, we are instead going to put the asset account of the asset that we sold to get the money. Now, of course, this makes sense because when we finish the transaction, the balance of the asset account should be 0. It should be 0 because we don't have it anymore. So therefore, we have to put the amount that we purchased it for which is the balance of the account. Now, when you think about our goal of making the balance of the asset account 0, you may realize we have a little bit of a problem. You see, the asset account will only become 0 if we put in exactly what the balance is. And in order to put in exactly what the balance is, so it becomes exactly 0 instead of becoming an invalid negative number that an asset cannot be, in order to get that asset account to become 0, we have to put in a decrease to the account of exactly the amount of the balance of the account. Otherwise, it won't finish with 0. But wait a minute. That would mean that when we record the deposit, we would have to be sure that we got paid exactly the amount of the balance of the account. Do you think that's something that's likely to happen?
So, let's face it. You're never gonna sell something that you own for the exact price you paid for it. You will always either have a gain or a loss.
And so, since you're almost always going to have either a gain or a loss when you sell an asset, therefore you have to report that gain or loss on your profit and loss for that month, which means that gain or loss has to be recorded at the moment that you sell the asset. Now, in order to record a gain or a loss, along with all the other information that we have to record at the moment we sell an asset, we therefore have to go back to the chart of accounts and add 2 accounts to the chart of accounts to record any gain or any loss we might have from selling an asset. And the name of the gain account will be called Gain on Sale of Assets, and the name of the loss account will be called Loss on Sale of Assets. So in order to get this particular type of gain or loss to show up under the net operating income, but still be on your profit and loss, it means the account type we choose will not be income or expense. The account type we choose will be other income or other expense. This way, it will still show up on the profit and loss because it still affects you, but it will not affect your net operating income, so that you can more fairly compare your net operating income month to month. So of course, to open the chart of accounts, we could either click the cogwheel, go all the way to the left and click Chart of Accounts, or we can click the transaction menu in the left panel and click Chart of Accounts. Now again, once we're in the chart of accounts, we go to the top right and click New. Now, the account name can be Gain on Sale of Assets. Pretty simple. The account type, of course, is income, but as I mentioned a moment ago, this would be other income. So you would not just come here for income, other income, as I explained a moment ago. And the choices are not that many for the detail type if you choose other income. So for our purposes, let's click Other Miscellaneous Income. Now we'll click Save and New. Then the next one will be Loss on Sale of Assets. And of course, that would be an other expense. So you wouldn't choose expense, you would choose other expense. And of course, there's not that much to choose from the detail type. So hopefully there's one that says Other Miscellaneous Expenses, and that should be enough. Then click Save or Save and Close. And if we run all the chart of accounts and see only the accounts created by us, we can see that we have the accounts that we just created: gain on sale of asset, loss on sale of asset. So now let's do an example. Let's imagine on April 3rd, Serena sold her bicycle for $900 to some customer who we don't even have to include the name. What does that mean? Well, when we look at the balance sheet here, we see that she actually paid $700. That means Serena on April 3rd will have a $200 gain that she must list on her profit and loss because she sold her bicycle for $200 more than what she paid for. Let's take a look at how to record it. So, because this is a deposit that requires more than one account in the line where it asks for an account, it's better to put this in the deposit window rather than use the register. And we know we go to the top left and click New, and we go all the way to the right and click Bank Deposit. Now, the date that we, by the way, the money amount that we got for the bicycle went into Chase bank account, and the date that it went in there was April 3rd of 2026. And we don't have to put the name of the person we received it from if it's just a one-time sale and we won't be dealing with that person. But if you want, you can add them to your list. But the account that you first put is the asset account itself. And when you put the asset account, the most or the least that you can put in there is whatever the balance is, regardless of how much money you actually got. So what we're going to do is we're going to put the asset, which is, it's in the asset section here, and it's the bicycle, Serena's bicycle. Now, the most money amount that you can put in the line for the bicycle is $700 because that's the balance of the account. So that's the amount you have to put to wipe out the balance. But we didn't get $700, we got $900. So we click below the line where it says the bicycle and we type in gain on sale of asset. And we actually gained $200. Push tab. Now the total deposit reflects what we physically got. And this $700 is going to wipe out the asset balance and make it zero. And this $200 will show up at the bottom of the income statement profit and loss, showing the $200 gain. So that's where the three numbers go in the deposit window. And when we click Save and Close, we can open up the balance sheet by clicking Reports, Balance Sheet. Notice the bicycle is not here. It's nowhere to be found. The stock is still here, but the bicycle should not be here because we sold it and it's gone. But the interesting thing is the profit and loss. If we click Reports and we go down to the profit and loss, we can see at the very, very bottom, below normal net operating income, we have another income account, gain on sale of asset. So all the numbers worked out perfectly. So now let's do a second example. Let's imagine on April 6th, Serena sold all of her stock in the very large corporation of America for only $500. And since she purchased the stock for $1,000, then logically, she has a $500 loss. Let's take a look at how to record this. Again, we go to the top left and click New. Then we go over and click Bank Deposit. Now the date of this is April 6th. Of course, the money went into this bank account. And again, if it's a rare transaction with this person or company, you don't have to add them as a payee, but the account must be the stock in the very large corporation of America. And because we no longer have the stock, we have no choice but to put whatever the balance of the account is, because this transaction needs to wipe out the balance because we don't have the stock anymore. But unfortunately, we did not receive 1,000. So we're going to have to find the account that says loss on sale of assets. And in this case, we have to put minus 500, then push tab. You see, that'll make all the numbers what we need them to be. You can see the amount of the deposit is 500. You can see that we're wiping out 1,000 of what we paid for the company's stock. And you can see we're acknowledging the $500 loss as a minus. So when we click Save and Close, you can see at the bottom of your profit and loss, there's the other expense section, and then there's the net income. So you see there's the net operating income, which is the income from how you normally operate, and that would be a reflection of how well you did. This gain and this loss are two anomalous things that don't usually happen, so they shouldn't affect your judgment about how well you did regarding your net operating income, but ultimately they are taken away from the final net income. And of course, if you go to the balance sheet by clicking Reports, Balance Sheet, you'll see the stock is no longer in the Assets section because we sold it. Now, I'd like to leave you with one final important word about recording the sale of any assets that you sell. It is very important that you make extensive use of the memo field or any other place in the transaction where you can put notes about the details of that asset sale. Every possible detail that you could think of must be recorded when you record your transaction of selling an asset. Now that's because even though from a bookkeeper's point of view, recording a gain or a loss when you sell is very easy, from a tax accountant's point of view, there's a lot of complex laws and complex procedures that go along with determining how much of a gain or a loss on any asset sale you have is or is not taxable. And if it winds up being taxable by some amount, what should the rate be? Those are complex tax questions that should only be answered by your tax professional when you go to do your taxes. Your job as the bookkeeper is to simply record exactly what the gain or loss is and make sure every other detail gets recorded in some memo or text field. The tax accountant will have to open up every asset sale and determine which sales are includable for your taxes and which ones should not even be included in the taxes. In fact, the tax law can be so complicated that you sometimes have to actually net your gains and losses together and then determine if it's a short-term gain, if it's a long-term loss, or whatever it is. So that's not for you to determine at the moment you sell the asset. Just make sure that you record all the details with the gain or loss so your tax professional can categorize that gain or loss appropriately when you ultimately do your taxes.
Chapter 23, Lending Money to a Friend.
Now, before we move on to the liability section of the course, there's still one more asset we have to discuss. If you are an individual or an estate, you could still have to account for lending money to a friend. So we know if we borrow money, that goes on our books as a liability. And we know that assets are the opposite of liabilities. So if therefore you're the one lending the money, that should go in your books and records as an asset. Now, this issue does come up when you're keeping records of personal non-business finance, because some people lend money to friends, and that really needs to be part of your financial records as far as keeping track of what you loaned and keeping track of everything that was paid back. Now, we all know someone in our lives that continuously comes to people with their hand out, whether it be a distant cousin, whether it be a long-lost friend, or just someone you know in your circle. So let's have our example person whom we are lending money to be one of our favorite cousins, Danny Deadbeat. Danny Deadbeat is kind enough to borrow money from you so that the audience at home can clearly see how to record lending money to a friend as part of your home family finances. So in a way, he's helping you.
So, Danny comes to you and he says that he has a temporary, one-time emergency that is totally not his fault, but he needs you to give him some of your money right now.
Huh?
So, you'll need an account in the chart of accounts to keep track of what he owes as he's making the payments. If he makes the payments.
So before we record the transaction, we will put an account in the chart of accounts that will be an asset type of account that will record the original loan to Danny and also record any payment that he paid back so we can track the balance as it's being paid back. Now, you should know a couple of things about this account. First of all, it's an asset, but when you lend money to a friend, it's proper to put the detail type as current asset. We hope this will be a current asset, if you know what I mean. Secondly, we have to decide a name, and the name that we give should not confuse it with any money that we actually borrowed from someone else. So let's call this account Receivable from Danny. We hope it's receivable, but that name will clarify the difference between money that's owed to us and any money that we might owe in future chapters. And again, we can open the chart of accounts by either clicking the cogwheel and going over to where it says Chart of Accounts, or in the left panel, click Transactions, Chart of Accounts. Now, once we're in the chart of accounts, we remember you go to the top right and click New. Now, the name, again, will be Receivable from Danny, so as to not confuse it with money that we owe to other people. So don't put the word loan in the name. Now, of course, the account type is Other Current Asset, we hope, and the detail type in this case would not affect us, but let's choose a proper one anyway, Other Current Asset. Now we click Save, and now we're able to record lending money to this individual. So if Serina wrote check number 12 for $500 on April 28th to Danny Deadbeat, what will be the result in the trial balance? Well, no need for fancy animation at this point. We know that the cash in the bank account will decrease by $500, and the current asset account called Receivable from Danny will show up in the trial balance for the first time as $500. Let's take a look. So, of course, this check came from the bank account. So we click the cog wheel and we go to Chart of Accounts and we go down to the Chase bank account. If you have trouble finding it, then remember, you click Created by You, and we only see the accounts that we created, so it's easier to find the Chase bank account. Click View Register. And of course, this is adding a check, and the date is April 28th. Of course, in our little story, 2026, the computer remembers we're up to check number 12 if we choose transaction type check, and the payee is not yet on the list, but we can add his name on the list as you can put him as a vendor, a customer, or an employee. So since we're lending the money, it really doesn't matter, but we'll put him as a customer and we'll call him his name. As long as the name is on the list, it doesn't really matter which of the three categories. They will all show up as an option in the payee field. So we put the name Danny Deadbeat that we add on the fly as we're doing the transaction. Click Save. And you can always go back to the customer area of data that we learned about at the beginning and add his address, his phone number, his website, email, and so on, or remove him from the list later. But the account category that we put in this case is the new account that we added. Type in REC to abbreviate Receivable from Danny. And we gave him $500, enough to make Serena's mother really mad that she loaned this guy the money. So when we click Save, the results in the trial balance are going to be exactly what we discussed. When we click Reports and we open our good friend, the trial balance, and we zoom in a bit, you can see that Receivable from Danny showed up for the first time as $500, and the Chase bank account, believe it or not, is $500 less than it was a moment ago. And to prove it, I can double click and scroll to the very bottom and see, if it lets me, sure, that April 28th, I wrote a check number 12 to Danny Deadbeat, and that before this check, the balance was $32.30. After the $500 check, it's $27.30 that it showed in the face of the trial balance. So now, let's imagine it's April 28th, and Danny miraculously pays back $100 of the $500 that he took from Serina. Now, imagine he gave physical cash, and Serina does not feel like going all the way to the bank to deposit this cash. So she will still acknowledge that he paid back $100 of the $500, but she will keep this cash in her wallet. So what will be the result in the trial balance when she records this cash repayment of the loan? Well, as I mentioned, she's keeping this cash in the wallet. So Serena's wallet will increase by $100. And of course, because Danny paid back some of the money he borrowed, the account Receivable from Danny will decrease by $100 and become $400. Let's take a look. So again, from the left panel, we click Transactions, Chart of Accounts, and because the money is being deposited into Serena's wallet register is the one that we will open. We double click, and again, this is a deposit because we are physically depositing Danny's check or Danny's cash to Serena's wallet. So that's why transaction type is deposit, and unless I misspoke, the date that we physically received this money was April 28 of 2026. Now, the person whom we received it from was Danny Deadbeat. But the reason we received it was because of the Receivable from Danny, the specific account that we originally set up to track the loan balance of what he owes us. That's the account that goes into the category. Now remember, Serena's wallet is going up. So this is a deposit to Serena's wallet of $100. So make sure you put the money in the deposit field. And when we click Save, we can open the trial balance and see the results are exactly as what we expected. Receivable from Danny has decreased to $400 from $500 because now he owes us less because he gave us $100. And you can see Serena's wallet is $100 fatter than it was a moment ago. I can double click the balance of Serena's wallet and look at the very last transaction on the 28th was from Danny Deadbeat, and before he gave her the money, it was $855, and after this $100, she now has $955 in her wallet. Now, at some point, you might want to make a point with this person who keeps borrowing money. So let's imagine Serina says to Danny, I would like your next $100 payment to additionally include an extra $50 of interest. That will help him understand that time is money and everything costs. But if Danny gives you a $150 payment, where $100 is supposed to reduce what he owes, and the other $50 is income you earned by lending the money to him, how would you record that? Well, before you record that, you would have to add an account to the chart of accounts to record just the interest income that you received from Danny as a separate amount that you earn and keep, separate from whatever amount he gives you to pay back the loan and decrease the balance. So let's imagine on April 14th, Danny gave you another $150 in cash, and again, we will still keep it in Serena's wallet, but we have to acknowledge that only $100 is decreasing the balance of the receivable loan to Danny, and the other $50 Serina keeps as a service fee, which is interest because she was kind enough to lend him the money. So we have to go to the chart of accounts and create an account called interest income. And because this is not the normal way Serina earns money, and because this is something that's rare and uncontrollable, we will not put a normal income type of account. We will again put other income so it does not affect our net income from operations, and we can still make a judgment of how well we're doing without this loan or this interest from Danny ruining the month-by-month comparison of our profit and loss. So let's go ahead and add the account now. And again, we open the chart of accounts. We click transaction, chart of accounts, or the other way, and we're adding a new account, and the name of it is interest income. Okay, now, of course it's income, but we will not put the normal type of income. We will not put this. We will put other income for reasons that I mentioned. And the detail type, again, in this case, doesn't affect anything, but let's do it properly. Other miscellaneous income. And now when we click Save, we now have an account in the chart of accounts to record just the interest that we get and keep for ourselves, separate from the amount that Danny pays back as a service fee to Serina for being kind enough or foolish enough to lend the money. So because we need two accounts in addition to Serina's wallet as part of this transaction, it would be better to record it in the deposit window instead of the register window. So from the top left, we click New, and we go over to Bank Deposit. Now, of course, the date is May 2nd of 2026, and the money is being deposited into Serina's wallet from Danny. Now, we have to click this down triangle in order to be able to get this little section here. Now, we received from Danny as part of this transaction interest income that Serina earned as a service fee that she keeps for herself for being kind enough to lend Danny the money. So this $50 on the first line will not decrease the principal of the receivable balance. But on the next line, we should also put Danny's name because he's the one associated with this. And on the next line, we put the receivable account that tracks the balance. And that one is only decreasing by $100. So the entire deposit is $150, but only $100 decreases the receivable, and $50 is Serina's income that she keeps forever as a service fee. So we click Save and Close, and when we click Reports to check the results in the trial balance, you can see the results are exactly as what we expected. You can see that the interest income that Serina earned was $50, and now the new balance of the receivable from Danny is $300. So I zoomed in a tiny bit too much, but you can see if I double click on that $300, you can see why it's $300, because originally we gave him a check from the Chase bank account for $500, and he gave us 2 consecutive payments of $100 that went into Serina's wallet. And the additional $50 in the last payment, that's interest expense that she keeps, so it does not decrease the balance of the receivable.
Chapter 24, Installment Loans and Long-Term Debt.
Now, everyone has to borrow money at some point in their life. If they want to own a car, if they want to own a home, if they want to go to college and take student loans, or whatever. But the type of loan we're talking about here is different than a normal credit card type of debt. We're talking here about long-term liabilities, which means usually when you pay back a long-term liability, like a home mortgage or a car loan or a business loan, usually those loans are what we call installment loans. And an installment loan means that you pay the same amount each month until the loan is paid off. Now, when you take one of these loans for one of the reasons I mentioned, each equal monthly payment that you pay back is split into 2 categories. Sum of each monthly payment is interest that the company that loaned you the money will keep forever as a service fee just for lending you the money. And any remaining amount of the monthly payment above whatever interest you owe for the month is the amount that decreases the balance of the loan. Now, that does seem a little bit complicated, but if you take a mortgage or a car loan or any other kind of installment loan, the company that gives you the loan is required to give you something called an amortization table. And an amortization table is a table that lists every future monthly payment that you're supposed to make in the same amount. And when it lists every single monthly payment that you're supposed to make, it clearly shows you for that payment, or rather for each payment, how much of that particular monthly payment is your interest expense that the finance company keeps forever, and how much of that same monthly payment remains to decrease the balance of the loan. So, when we do an example, we will give you the same type of amortization table that the lending company would give you if you had an installment loan. So let's imagine on April 30, Serina borrows $10,000 at the annual rate of 12% per year, and she's expected to make 10 equal monthly payments to pay back the $10,000. Now, if those were the terms of this example loan, this is what the amortization table would look like for those 10 payments. You could even use Excel to create your own amortization table so that you would know for yourself, under the specific terms of the loan agreement, how much of each monthly payment will be interest expense that the financial institution keeps as a service fee, and how much of the remainder of each payment will actually decrease the balance before you go to the next month. Now, I'm sure many of you have questions about how an amortization table is made. I can tell you that if you look in the description field below the table of contents, one of the links is a link to a video that will clearly explain all about installment loans and how they make the amortization table to come out perfectly, so that based on the terms of the loan, you have exactly the correct number of payments, the right amount of interest, and it will properly show you for each monthly payment how much is interest and how much decreases the principal balance. But this amortization table is what we will use in our first example to both borrow and experience recording paying back 2 or 3 payments of any installment loan. So how do we record the initial borrowing of the money? We use the deposit window. But before we can record borrowing the money and before we record paying it back, we have to create the proper accounts in the chart of accounts in order to be able to record things properly. So we have to add 2 specific accounts to the chart of accounts to be able to do this. First, we obviously have to record in our chart of accounts an account called Installment Loan Payable, and that will be the long-term liability account that we will record all transactions that relate to the loan. We will use it to record the initial borrowing, and every time we pay back, we will record the payment into that account, so that account will track the balance over time. We also need to add to the chart of accounts an account called interest expense. And again, since this is not a normal operating expense, we could choose to make it other expense or part of the regular expenses. I think interest expense could go in the same category as all the other expenses because it is a reflection of how well you're doing as you manage your business. But again, it will be up to you ultimately to choose what account type and what name to put in your own financial records. But let's go ahead and record these accounts in the chart of accounts. So of course, we always open the chart of accounts, and I like to click the cog wheel and go over to where it says chart of accounts. And then of course, we go up and click new for new account. Now you can pause the video if it takes you a moment to type in the name in capital letters, Installment Loan Payable. Now, as discussed, this is a long-term liability. And again, in this case, the detail type will not affect us, but let's do it properly anyway and call it Other Long-Term Liability. Then, I think instead of Save, you should click Save and New. This way, the new account window will stay open when we enter the interest expense account. And we go. Now, this, of course, is an expense, and I would not put other expense. In my opinion, interest expense on a loan that you take for things that you need for whatever, whether it be operating or doing your business, is not other expense under the operating income. In my opinion, it's a normal expense, but you'll decide which position in your profit and loss you would like this to appear. And of course, the detail type won't affect us in this case, so let's just put other business expenses. And then, of course, we can click Save, and the window will close. And when we choose only the accounts created by us, you can see we have the installment loan payable on the list. And if we go down here, we have interest expense. And now we're able to record transaction for the long-term liability installment loan. So again, let's imagine on April 30, Serena borrows $10,000 from the very large corporation of America lending company. You can add that name on the fly. And let's imagine the money gets directly deposited into her Chase Bank. Don't forget the terms are 10 equal installment payments at the annual rate of 12% interest. We're going to use the amortization table when we make payments to pay it back. But when we record the initial loan, it should be as easy as any other transaction. Now, of course, the $10,000 that she borrowed got deposited into her Chase bank account. So it's the Chase bank account register that will open. And this is a deposit on April 30, 2026 is our little story. Now, the account, of course, will be the installment loan payable account, because that's the reason for it. We created it to track all the transactions and the balance of this particular loan. Now, the people we borrowed it from are not yet on the vendor list, but they are providing a service. So they are vendors, and they are they're the people we borrowed the money from, and we're going to be paying it back. Click Save. So now we have who and why and when. Now this is a deposit going into the bank account for the $10,000 that Serena just borrowed. So 10, tab. And of course, if we save it, we already know what will happen in the trial balance, but let's confirm and take a look. If we click Reports and we open our good friend, the trial balance, you can see installment loan payable shows up for the first time as $10,000, and you can see the bank account has increased by $10,000, exactly what you would expect. Now, of course, if we borrowed the money on April 30, it means the first monthly installment payment should be on May 30th. Now, here we are looking at the amortization table that will tell us all the information we need to record the first monthly payment. So let's take a look. We see that every monthly payment will be the same, $1,055.82. But if we look at only this column, we can see the specific numbers that we need to record the first monthly payment properly. Notice that even though we're paying $1,055 every time, for the first payment and only for the first payment, the amount of interest is $100. That means that the rest of the $1,055 will reduce what we owe. They get to keep the interest forever as a service fee for lending the money. But if we pay more than the service fee, whatever extra we pay decreases the principal balance. So if this is the amount of the monthly payment, that means that this will be the amount here that we reduce the principal by, which means after we record this first payment, the balance will decrease, but the balance will not decrease by the $1,055. It will only decrease by the $955 here, and according to this table, it should be $9,044.18 when we finish our first transaction. Let's take a look at how to record it. Now, because there's more than one account changing in this transaction, it's best to use the expense window rather than the register window. So we go to the top left and click New, Expense. And of course, the date of this particular expense is May 30th of 2026. We're paying the very large Corporation of America lending company, the people who were kind enough to lend Serena the money in the first place, and we're paying from Serena's Chase bank account. Now, of course, normally there'd be a reference number, but the most important thing to concentrate on in this particular transaction are the two accounts. First, we have the interest expense that's specific for this month. And if we go back to the amortization table, it says for the first payment and only for the first payment, the amount of interest expense is $100. So that's the amount we're going to put on the same row as the interest expense account. Now, the rest decreases the balance of the installment loan payable, which goes on the next line. Watch carefully. The amount the balance is being reduced is $955.82 for reasons I just explained. $955.82. Notice the entire amount of the payment is $1,055.82, which is exactly what the amortization table wants us to put as the entire payment. And after we save it, this amount, $9,044.18, should be the ending balance according to the amortization table. So when we click Save and Close, we can open the trial balance and zoom in a bit and see two important things. First of all, the interest expense showed up for the first time in the amount that we recorded, $100. Secondly, the installment loan payable balance is now $9,044.18, which is exactly what the amortization table says it should be after the first monthly installment payment. So now let's do the second consecutive monthly payment where we will pay it on June 30th. And when you take a look again, we see that this column, the payment column, this row, the payment row, tells us for every monthly payment exactly what the amount should be regardless. But we don't put it in that way. We look specifically at the column of payment number 2, and we see that the interest expense for payment number 2 will be a little bit smaller, which will make sense because the amount of the balance after payment number 1 is lower. So if you owe less money at the end of this month, the amount of your interest expense will be less at the end of this month. And again, if we're still paying $1,055 here, and they only get to keep for themselves $90.44, that means the rest of the $1,055 decreases what we owe, and this will be the principal reduction when we record this second monthly payment, and we use this column to do it. We go back to QuickBooks and click New, Expense, and this time the date is June 30th in our little story, and we're still paying the same people whom we borrowed the money from. Click No because the numbers are, by the way, when you get that message, always click No, because the numbers will almost always be different when you're paying the same vendor a different payment. So normally there'd be a reference number, but again, we're focusing on the accounts, and the interest expense in this second monthly payment, the amortization table tells us to use $90.44. So we put in the amount $90.44. That means that the installment loan payable, which is the account that tracks the balance of what we owe, will decrease by the amount the amortization table tells us to in the second monthly payment, which is $965.38. So $965.38. Notice again, the total amount that's coming out of Serina's account is $1,055.82. But this time, this is the amount of interest, and this is the amount the loan payable decreases. When we click Save and Close, we can open the trial balance the way we normally do and zoom in the way we normally do, and we can see that interest expense has here it is, $190.44. That's the $100 from the first payment and $90.44 from the second payment. But look at the balance of the installment loan payable, $8,078.80, which is exactly the amount that the amortization table says that we owe after the second monthly installment payment. And of course, if we double-click Serina's bank account, we see that the last two transactions were the last two monthly payments we made to the loan, May 30th, June 30th, to the same company, and it was the same amount for each of the monthly installment loan payments.
Chapter 26, Class Tracking for Taxable Income.
Do you know how to use the class tracking feature in QuickBooks Online? This special tool will help you categorize your transactions in the way that your small business or your home family's financial situation needs you to. In fact, this tool can even help you estimate your taxable income. One of the greatest things that QuickBooks Online can do for you if you're using it to manage your personal home finance is to separate the income and expenses that belong on your tax return from the income and expenses that do not belong on your tax return. Now, this will help you when making decisions, and it will also help the tax professional that you give your books and records to take the results, put on the form, and file your taxes for you. So, how do we separate that which belongs on the tax return from that which does not? Well, before we talk about how to do this in QuickBooks Online, let's talk a little bit about how taxes work. Sometimes when we receive money, it still counts as income that increases our personal net worth, but that particular income we do not have to include as income when filing our taxes. And it's the same thing on the other side with expenses. Sometimes we pay a legitimate expense that lowers our net income and net worth, but that particular expense we are not allowed to deduct. So, we need two separate profit and loss. We need a profit and loss that only includes taxable income and deductible expenses, and we can put the income that's not taxable and the expenses that are not deductible on a different profit and loss. This way, when we give our profit and loss to the accountant to do the taxes, only taxable income is in the income section and deductible expenses are in the expense section, so you would have at the bottom of that particular profit and loss a pretty good estimate. Not a perfectly accurate number, but a pretty good estimate of what your taxable income is for that tax period.
So, you have to be sure that you classify income that's taxable separate from the non-taxable income.
Now, the way to do this in QuickBooks Online is to activate something called class tracking. This is a feature that allows you to add a little piece of data to every deposit that you record and every check or expense that you record to tell QuickBooks Online which class category this particular transaction is in. Then after we record the transaction with that little extra piece of data indicating which class category the transaction is in, we can then run a profit and loss for that specific class. So if we create two separate classes, one for deposits, expenses, and checks that will be included in the tax form, and another for deposits, expenses, and checks that will not be included in the tax form, then we can run a profit and loss for only the things that are included in the taxes and have a very good estimate of our annual taxable income. Let's take a look at how to do this in QuickBooks Online. So before we actually activate class tracking, let's take a look at what's not there that will be there after we activate class tracking. So if we go to the top right and click the cogwheel right now, and we go over to the column of lists, we see there is no class list. In fact, if we click all lists and open up the list of lists, you can see there is no list of classes right now because we have not yet activated it. Now, the way to activate the class list is to again click the cogwheel and go all the way over to where it says Account and Settings. Now, in the Settings window, all the way on the left panel, the very bottom choice is Advanced. Click on it, click OK, and you can see there are different sections of the advanced settings. The section that we want is the category section. So we click anywhere in the section to open it up, and you see where it says Track Classes. If you click it from gray to green, green means that it's activated. Now, that's all we need to do for now, and you can explore and experiment with the other options here later on. But after we click Save, you notice it says Track Classes is on, but you're not finished. It will not save the activation unless you additionally go to the bottom right of the Account Settings window and click Done. So now if we refresh the list of lists, you can now see that since we activated class tracking, classes are now on our list. Now we can open up the list of classes and see we don't have any classes yet because we just activated this now. So we're going to create two classes, includable and excludable. And when an item is includable on your taxes, like normal income and normal expenses, that will be the class we choose. But if an item is not includable, like a gift from income or some kind of expense that you cannot deduct, we will choose excludable class so that we can see exactly what we have as part of our estimating our taxable income. So, in order to put two classes on the class list, we click New. Now, the first one will be includable, capital, and that will be most of our income and expenses, and we'll click Save. Now, we click New, and we'll name the next one excludable. And then we click Save. And you will see that now that we've activated class tracking, whenever we go to make a deposit, check, or expense, there will be an additional field of data where we can choose whether we're including or excluding this transaction on the taxes before we save the transaction. Now, before we do our first transactions with class tracking, we also have to do one more very last step. We have to set up and customize and memorize the special profit and loss that separates things by class. And the name of the report that separates things by class is called the profit and loss by class. Let's open it up and set it up as part of our custom reports so that after we make a transaction where we use class tracking, we can really see the results and how this works in the profit and loss by class report. So we go to the left panel and click Reports. Now, we're trying to pull out from the standard area our new report, Profit and Loss by Class, and save it in the custom area. So that report should be in the Business Overview section of Reports, and then it's right here, Profit and Loss by Class. It's there because we now activated the class feature. So we click on it, and in our class, we change it to all dates and run report. And notice right now, there are only 2 columns because we have not yet had a transaction where we used one of the classes as the extra piece of data. But what we must do is click Save Customization. You can give it any name you want, but I like to leave the name and click Save. So now it will be very convenient to click Reports, Custom, and go down to Profit and Loss by Class after our first example transaction. So now let's do our first transaction using the class tracking that we just activated. Let's imagine on April 23rd, Serina's Aunt Tilly gave her $1,000 cash just as a gift. Well, even though I'm not a tax expert, I happen to know that the first $13,000 of cash gifts that you receive are not includable, or you are not required to include that income in your taxes. However, in your books and records, when you're keeping track of home finance, you must record that because it changes the balance of your bank account and it's still income even though it's not taxable. So let's take a look at how to record it. Now, because we have already activated class tracking, we could record this transaction either in the register or the deposit window. Both of them will have new additional fields for class tracking. But let's do it in the register because we're accustomed to it. We can click Transactions and then go to Chart of Accounts. Then we want to go View Register for specifically the Chase bank account that the $1,000 from Aunt Tilly came into. So we click View Register, and you can see there's a brand new column here for class tracking and even tracking location if you were to have activated location in the settings window. But we only activated class. Now, the new transaction is a deposit, and the date was April 23rd of 2026 in our little story. Now, the person who gave us the money was Aunt Tilly. You can add her on the fly, but you don't have to. Okay? And you could put her a customer, vendor, or employee. She's giving the money, leave it as a customer. But most importantly, the account. What's the reason that we got this money? Well, it's income from gifts. And we don't have an income from gifts in the chart of account. But we can add it on the fly. So we click Add New. And obviously the account type is an income type. Okay? And the detail type is just other. You don't want to put other income, have it go to the bottom. or other primary income, have it stay on the top of the income statement, profit and loss. It's totally your choice, but the name is gift income or income from gifts. Okay, save and close. Okay, good. Now, most importantly, the class is excludable. We will not include this gift on our taxes because every year a certain amount of cash is non-taxable if we receive it as a gift, and that amount changes every year. Okay, so the amount of this deposit is $1,000. And then, of course, we click Save. Now, of course, the trial balance will change, but the most important report to take a look at after this transaction is the profit and loss by class. So we click Reports, Custom, Profit and Loss by Class, and notice we have one amount in the excludable column, so anything in that column will be excludable rather than being taxed on it, and that will be the column that you can see has income and expenses that are not includable on your taxes. And in order to really make the point, let's do a second transaction.
This job is taxable even if I'm only a 1099 worker.
Hey, Serina.
Hey, Danny, tonight, there are free peanuts at the bar.
Free peanuts? Roadhouse.
So remember, income from Serina's job is taxable no matter what, even if a certain amount of cash gifts are not. So now let's try an example with an expense. Let's imagine on April 28, Serina paid $30 from her cash and wallet to McDonald's. And this particular meal is not deductible for taxes. Let's take a look at how we record it. And again, we could record this in the check window or expense window, and they would both have an extra field for class, but we might as well record this in the register because that has the class field as well. So again, we click Transactions, Chart of Accounts. Now this came from Serina's wallet, so we click View Register, and of course this is an expense, and we didn't really notice the number on the receipt at McDonald's, so that happens sometimes, but the payee was McDonald's. Clearly, QuickBooks Online remembers its food expense. If it chooses a different expense from the one that we have here, you have to carefully look at it and change it yourself. But clearly, the class shows up as excludable because you can't always deduct your McDonald's from your taxes. And be careful. If it pre-fills the expense, it might accidentally pre-fill the payment amount, and you want to overtype it with the proper amount of this particular transaction, which, by the way, was on April 28 of 2026 in our little home finance story. But you could use class tracking for small business exactly the same way. So when we click Save, we could then go to Reports and Profit and Loss by Class, and notice, let's zoom in a little bit this time, and you can see this $30 she cannot deduct from her taxes, just like this $1,000 she doesn't have to include on her taxes, and so on. So that's the way you use the class tracking feature. Now here we are, close to the end of our little home finance adventure. And you need to have confidence that if you've been following all along, you really do have everything you need for yourself and your family to keep perfect home finance records. However, it would still help you to know the additional techniques that would normally only apply if you were keeping records for someone's estate, trust, or will. You see, most of the items that we dealt with in this course were profit and loss items. That means they're transactions that would normally show up on the profit and loss, And usually that's all we would need as individuals or families. However, if we're keeping records of someone's estate or keeping records of some kind of trust fund, we would need additional bookkeeping techniques to keep records of the things that would normally show up on the other financial statement, the balance sheet. And every individual or family can have an individual profit and loss and an individual balance sheet. But usually families and individuals don't really need to keep that many details of transactions that relate to the things on their balance sheet. However, if you're keeping records for a trust and estate, you have no choice. Now, I am going to keep my promise to you by showing you everything you need to keep records of a trust and estate and everything you need to keep records so you can show an individual or family balance sheet. But unfortunately, this particular video is much longer and a lot less funny than I originally wanted it to be. So in order to keep my promise to you by giving you all those additional topics, I'm going to ask you to please look in the description field for the link to the sequel of this course. Yes, that's right. If you look for Home Finance Part 2 or some similar name, you'll see that the video that follows this one will cover all of those remaining topics. You will see that those additional topics are just as easy to understand as everything you've learned here, and you could still choose to apply them to your personal or family finances. But of course, if a day ever comes that you have to be the one to keep records of someone's estate, the information in that sequel will give you everything you need.
Roadhouse! And if you don't want your house to be a roadhouse, use QuickBooks Online to manage your home family finances.